Oh, I knew.
We're live at 5. Should keep that in there.
Are we going?
Yeah, man. Whenever you're the hit it man.
Okay, just let's leave all this in. Hit it.
It's Friday, August 11th, 2023, episode 219. I'm Patrick Seresna.
And I'm Kevin Muir. This week, Jason Shapiro, author of The Crowded Market Report and featured in Jack Schwager's Unknown Market Wizards, joins us for fascinating discussions about his life, what made him a pathological contrarian, and how he uses that to make money in the markets. Then it's time for Talking Charts, where Patrick uses his techniques to tell us what he sees from the latest market action.
Nice. And then we settle up our skin in the game bet. And folks, we might even drink some beers along the way. Lena, hop on. What beer are Kevin and I drinking this week?
So on this rare occasion that you guys are drinking the same beer, we are drinking
worked out.
Everbrew Everterps Kosher Tangy New England IPA. It's an interesting tongue twister of a name.
Actually, it's nice.
Well, I'll tell you why it's so nice.
All right. Okay.
It has dry hopping from Galaxy and Citra, produced with the addition of terpene strain Kosher Tangy. Do you guys know what that is?
Absolutely no clue.
It's Kush.
I still don't have no clue.
Earthy, pungent aroma and flavor with intense citrus.
Nice.
Patrick, you don't know what Kush is?
He's lying.
Oh,
seriously? You know what? If anyone wants to know what Kush is, just Google Jeff Gunlack when he got fired, when he left his previous job. And Dealbreaker had a list of all the things that was caught in his office, and one of them was 90210 Kush.
Okay. Quick announcement. We're giving the team a summer holiday. So the August 25th episode coming up will be an interview-only episode. But we'll be back to our normal format in September. Kev, why don't you hit him with the side effects?
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include volatile after-party retracements, late night LNG short squeeze, and the untimely lumbar support failure.
I've never had the lumbar support failure, but
as you get older, that
happens. All right. Let's get to the interview.
Well, it's our great pleasure to welcome to the show Jason Shapiro. Jason is the founder of the Crowded Market Report, and just an interview I've been looking forward to for a long time. Jason, thanks for joining us.
Oh, thank you for having me.
Yeah, this is probably one of the most anticipated interviews I've had. For those who don't know, Jason was actually featured in one of Jack Schwager's renowned Market Wizards book. He was part of the Unknown Market Wizards? That was it, yeah.
Came out a couple of years ago.
That's right. And now he has an illustrious career with lots of great stories. And I reread the chapter, and I realized it was by far and away my favorite chapter in the book. And if I had to pick anyone from that book to interview, it'd be you. So let's jump into it. You have kind of a very unique start to the markets. Why don't you just kind of walk us through, where did you grow up? Did you always think you were going to be in the markets? How did your kind of path towards this role as a Crowded Market Report guy start?
Yeah, I grew up in Jersey. Did I always think I would be in the markets? I mean, it was one of those things where, like, my dad was kind of into it, and the biggest torture for me growing up was when we ate dinner every night, we had to watch FNN, which I think was the predecessor to CNBC or whatever.
Right. Yep.
And we used to have to listen to that, and it was just painful. And I watch my kids now because I have it on every day. And I'm like, these poor bastards got to go through exactly what I went through. But I guess, maybe subconsciously somewhere in there, it created some interest in there. If nothing else, because, like, as a kid, you don't really know what the hell you're talking about. And gee, the stock market seems like where people go to get rich, right?
Right.
So that kind of sounded cool to me.
In your book, you talked about getting kicked out of a lot of high schools and schools. Like
only 3.
Oh. So when did that start? And like, what were the reasons? Like, did you just know better? You just couldn't help yourself?
Did I know better?
Well, you thought you knew better?
They knew better.
Yeah.
I mean, just insubordination,
Right.
I was a bad kid.
And so
and my parents, in their struggles, they kept getting the whole thing of, Jason doesn't live up to his potential, that whole thing.
right.
And so they tried. My brother he was a good kid, and he did very well. And he went to one of the big prep schools, and did well there. And they tried to send me there, and it didn't work.
Okay.
And then, they sent me to another one, also didn't work. And then they sent me to a private school close to home, and that didn't work. So back to public school I went.
And then, so you went off to university,
Mm-hmm.
and your first year of university sounds like it was a lot of fun, but then you very quickly figured out that you had to do something different. The partying was no longer as.
I mean, it just gets to a point, right, where you start to grow up, and you're like, and clearly, I think I might have talked about in the book, but me and a couple of my buddies were thrown in jail one night.
Oh, and I think you mentioned that.
Yeah, so just drunken sort of stupidness, and we were chucked in the tank overnight. And the things that I witnessed in the downtown holding cell, I was like, okay, I have to figure something else out, because this is not where I want to be. And from that kind of moment on, I started taking things a little bit more seriously, and I started taking school more seriously, and I just started taking everything more seriously. And in a way, I was fortunate that in high school, I was so out of control that I got a lot of that out of my system. A lot of people go to college and they get a little bit out of control.
Right.
And I kind of was watching them in college being like, I've done this, you know what I mean? Oh, what, you're doing drugs, whatever, I was doing that when I was 16,
Yeah.
And it just seemed boring to me. And so, and on top of the fact that I wanted to kind of get my life together, I started taking things a little more seriously and taking school a lot more seriously. And it was easier because I was now going to school for something I was interested in. So therefore I had a motivation to focus and learn it. And that's what I did. And then I was doing things outside of school. I was working full time in a business, and I was doing a lot of reading on the side. Got into reading somewhere around then in college, and I was just devouring books at the Barnes and Noble. And really starting to get, when I look back, probably not really getting a real idea, but at least starting to put in work and starting to understand what it took to do work and succeed at that.
Right. So you're studying finance, but you didn't actually get a job out of school doing finance. Walk us through kind of the next stage in your career.
Well, Goldman wasn't recruiting at the University of South Florida. So I went home and delivered Domino's Pizza and delivered the Wall Street Journal for about 6 months, because the only asset I had was a car. And I saved up my money, and I bought a ticket. I went to Japan, and I was teaching English in Japan.
Right.
And then I got a job with HSBC, who at the time, I think they still have it, but it was called the International Officers Program, which they had been doing for 120 years. And they had just first started to hire, maybe try to get some American kids in there, because they bought Marine Midland, and they were kind of going global and all that. So they were looking to get some other people besides British people in there. I can tell you, I can never get that job now, because now it's all these high level MBAs that are getting that job and all that. But because they were just getting into this, and not of American people knew what HSBC was, I got the job. And that lasted, I think, 18 months before they.
And this is in Japan still? You're in Tokyo?
This was in Hong Kong, yeah.
Oh, in Hong Kong.
The way that program worked was it was like a 5-year training program where they sent you to 5 different places within HSBC. And then once you got done with that, you kind of got into their executive, and you just started moving up the ladder depending on, whatever, whose ass you kissed or whatever it was. I never made it that far, so I never found out. But so in the 18 months I was with them, I want to say I was 3 months in Hong Kong, then I was 3 months in Malaysia, then I was 6 months in Singapore. And then the last 6 months were in Hong Kong, and then they showed.
Is this the early 90s, Jason?
This was the early 90s, yes.
Yeah. Okay. So before kind of the Asian crisis and everything.
Yes.
And
that's how I got into trading. Was I was in this job, and it's like a commercial banking job, and it was super boring, and it was not really what I wanted to be doing. And just like a lot of people that get into the markets this way when they're young, I was bored at my job, and there was this bull market going on outside there, and it seemed all very exciting. Hey, that sounds like a fun way to make a lot of easy money. So I got involved in the Hong Kong bull market sort of in the early 90s.
And so what you're saying you got involved, you just started trading a PA?
Yes.
Okay. And so you scrabbled up some money and you started banging around futures. Like, how were you phoning? It wasn't online back then. You probably had to phone in your orders and everything.
Yes. I played on a softball team.
Yeah.
And one of my buddies who was on the softball team was a broker, a Hang Seng Index futures broker.
Okay.
And I called him up one day. I put, I don't know, $5,000 into the account or something like that, which was probably all the money I had, and said, okay. And the market, I can remember the market was like up a bunch. And I was like, oh, well, why don't we sell it? And he's like, well, I don't think that's a good idea. The market's strong. I said, okay, buy it. Like, I didn't know the difference. So we bought it. And it just kind of went from there. I went out. I always talk about it. I went out that day at lunch to the bookstore. I said, like I said, I had been big into reading at this point. So I was like, I better go get a book because I have no idea what the hell I'm doing. I don't know what a futures contract is. So I saw Market Wizards, which at the time was actually, in the bookstore on the shelf. I didn't know that, everybody knows Market Wizards now, and I didn't know what it was then, but it looked kind of cool. An interview with, a bunch of successful traders. That sounds good to me. So I bought it and I read it that day. I finished it before I went to sleep. And in the morning I said, yeah, this is what I am going to try and do with my life.
That's fascinating. Well, but what was the feeling kind of fast forwarding to when Jack phoned you or reached out to you and invited you to be on his latest version of this book? Like, was it just,
it was a little weird because, well, it was weird because, at 22, we all used to read Market Wizards and we would quote it to each other every single day. I read that book so many times. To this day, I could sit here and it's like, watching The Godfather, right?
Right.
I could sit here and quote you that book all day long because I probably read it 30 times, right? And we used to do that all the time. And of course, as a 22-year-old, we go, oh, I'd love to be a market wizard, right? But then, Jack calls me up, and at this point, I'm a 50-something-year-old, and I'm really not looking for anything at this point. You know what I mean? I'm not looking to prove anything to anybody. I like to be living a quiet life. I'm not looking to raise money. I'm not looking for any of this stuff. So I kind of hesitated. And I was like, and I was going out to Boulder to a friend's daughter's wedding, and Jack lived in Boulder. So I said, why don't we have lunch? So we had lunch, and we had a long talk, and it was really cool. And he was like, oh, I didn't tape any of that. I wish I did. Can I get you on tape? I was like, I don't really know, Jack, if I want to do this. I don't really want publicity. But my friends were all like, come on, man. You know what I mean? We love Market Wizards. You got to do it.
It's Jack Schwager. You got to do it.
So I did. And, and it's been great. Listen, it's been great. It's been fun. I've met a lot of sort of cool and smart and interesting people because of it. So I'm not going to complain.
All right. So you're in the HSBC program, but you start trading futures. Do you eventually just say, that's it, I want to just trade for myself? Is that the next step in your kind of evolution?
Yeah. I mean, yeah, it was silly because it was it was a bull market and I was young and stupid and therefore leveraging way more than I ever should have been. And within 6 months, I made I don't know what the number is, but $400,000 or $500,000, and I'm like, okay, so if I just keep doing this, then, within 3 years, I'm George Soros, right? So much as I didn't like my job before I started doing that, I just completely stopped working. And it was horrible for these people because I was in this sort of elite program that really reported to the head office, the very highest part of the head office.
Yeah.
So these poor people that I was working for in their department or whatever couldn't do anything. They couldn't fire me because it wasn't up to them. It was up to the head office, right? And they, of course, had this whole long process on it. So I sat there for 6 months and literally did nothing. And these guys would get so frustrated. I feel so bad for them. But it was no different than my teachers or anybody else I'd ever worked for. You know what I mean? I was just a jerk. And when I started making money trading futures, it became even worse because I really didn't care. Right. So they eventually, I finally got to my 6-month review with head office and they were like, okay, pack your bags. And by that time I had been interviewing already, and I was trying to get a job at, a brokerage house, whatever, Morgan Stanley, whoever, and none of them were hiring me. But I ended up getting a job with some institutional, like Asian brokerage house, where my job was supposed to be trying to get order flow from the U.S. institutions.
Okay.
Which I did get some of, but really I was just trading my own account for most of it.
And so how did that, like, was that almost straight up for you? Like, was it just, it kept getting easy? Like there was, and was there any kind of rhyme or reason to your trading, or were you just young and bold and going for it?
Young and bold and going for it.
Okay. And so you're doing that. Now, eventually, does that end like most people with young and bold and going for it, where it blows up?
Sure does. Why should it be any different?
Right. So when does that happen, and how big is the blow up?
Oh, as soon as the bull market ended, I lost everything.
Right. Okay. So you lose
the only thing I had left. The only thing I had to show for it was this sports car that I bought, which I could then no longer pay for the parking because I had lost all my money.
You couldn't afford the parking.
No.
And so are you in Hong Kong at this time? Where are you living?
I'm in Hong Kong.
Okay. So you blow up, like we've all been there. We kind of understand that feeling, a young person doing that. What do you do from there?
Well, I just kept sort of trying to fire, save up some money. And then all of a sudden I found this new thing, which was shorting, right? And now it was a bear market. And so shorting, and then that was probably the worst drug I ever found. But suddenly started making money on the short side because it was a bear market, and just went through the same cycle. Made a bunch of money shorting, and then didn't know when the bear market was over. And when it turned, gave that all back. It kind of reminds me of what's going on now. You know what I mean? A lot of people came in after COVID, made a bunch of money just buying anything.
Right.
Lost it last year, started shorting the second half of last year, and all of a sudden fell in love with shorting and got, ripped this year because of that. Right. I see a lot of what I did and what's going on now.
Okay. So at a certain point, you have kind of a revelation about your trading. Is it after you've kind of done it in reverse, and you've kind of done the same kind of a cycle or experience where you take something too far? Like when do you have the kind of epiphany?
I think that after the second time I lost my money, I really started to dig in. Again, what I think a lot of people do. Okay, this isn't easy. I have to learn how to do this. So I read all the books, Warren Buffett, technical analysis, market psychology, the whole list of books that everybody reads, right?
Right.
Read them again and again, and took some notes and really tried to put it together, and started trading and started doing a little better after that, at least in terms of risk, but was still kind of boom bust for the most part. For a good another 5, 6, 7 years. I had great runs, and then had crappy runs and great runs and crappy runs. And finally came to the conclusion where I was like, okay, I've just wasted 10 years because I've gotten nowhere here, right? I've had some good times, but I've gotten nowhere. So if this is what I want to do, then I really got to figure out what the hell I'm going to do, because this isn't going to work, right? So I went back, and I was lucky that I did listen to a lot of the books I read. And so I was pretty diligent in keeping like trading journals and all that stuff. So I was able to go back, and I took about 3 months, and I went back and went through all my trading journals and really tried to decipher what trades are working, what trades are not working. And I'm not talking about worked once or worked twice. I'm talking about what has worked over time, right, and what has not worked over time. Like, hey, this breakout trade made me a bunch of money once, but do these breakout trades work for me over time? And so I went through that whole thing and really tried to eliminate, obviously, the ones that didn't work over time and stick to the stuff that did work over time, and started to develop a process.
And during this period, were you trading, or you actually took it off and you researching?
No,
that's all you were focused on.
Yes.
So you put your head down. And so when you say you kept your trading journal, does that mean you kept not just like writing comments about things, but you kept every single trade, and you could see your P&L for the various trades?
Why I did it, why I put the trade on, where I was going to get out, what the final result of the trade was, be it I made or I lost, and any other note that I wanted to put on the trade. But the most important part was why I used to put them into different sections. This is a contrarian trade. This is a breakout trade, things like that, right?
Okay.
This is a day trade. This is that kind of thing. So then I was able to back and go through those different type of trades and see which ones were really working for me.
Now, in hindsight, that trading journal was kind of integral to you figuring out trading. Would you not agree?
Yes.
And so can I ask what made you have the discipline to make that journal?
I was just following what people were telling me to do in these books that I read,
Oh, okay.
and a lot of the real good books about this, trading for a living, those type of books mention that you should do that. Right. And so I did. This is really what I wanted to do. So I was going to do whatever I thought was necessary to make it happen. And not only is it what I wanted to do, I feel like it was the only thing that I could do, because being an employee was clearly not going to work for me. I was never a good listener of anybody. Right. So that clearly was not going to be a good thing for me. So I was either going to be, a waiter or something, which probably wouldn't work either because they would fire me too. But or I was going to try and figure this out. So, and I knew that. So therefore, I was doing whatever I could do to try and at least increase the odds of this happening for me.
All right. So you go through this. You do all this research about your trading. What is the final conclusion you come about which trades work for you particularly?
So I've always been sort of, I've had this contrarian bent to my life. So, and my thinking, my thought process. So I was focusing on contrarian trades, but the key to it really was the difference between being contrarian and just being stupid and just being a wise ass, selling because you think everyone's buying because you think everyone's selling. And really the key there is price, right? Just because something goes up a lot doesn't mean that selling it or shorting it is the contrarian trade, right? That can just be the stupid trade. You're just getting in the way of a trend, right? And we've seen this year en masse with like NVIDIA, right? NVIDIA going up and everybody trying to short into it because it's ridiculous and it just keeps going up and up and up and up and you blow out, right? So I stopped trying to do that and I tried to look for how to actually be contrarian. And the conclusion that I came to was you don't want to be contrarian price. You want to be contrarian participation, right? So it's not, hey, this thing's gone up a lot, so let's short it. It's more, hey, everyone in the world is long this thing, so let's short it. And so I started looking for how do I figure out how everyone in the world is long this thing. And I started looking for data and I started looking for other things. And that's kind of where I went with that.
And so from there, your results improved, like they just took off?
They did a lot better from there, yes. It took a little while to sort of really nail down everything. But starting in, I would say, there was a big thing after the internet bubble in 99, where it was obvious that there was a bubble going on.
Yeah.
And I was shorting that bubble because all of the signs were there. But the more I started shorting it in the summer of 99, and the Nasdaq went up like, 40 or 50% from the summer of 99 until January of 2000. Now my risk management was better now. So I was stopping out, not doing, I wasn't going to blow out doing that, but I was losing money. And that's when I sort of found the commitments of traders data. And I noticed that I wouldn't have shorted that stuff all the way up until January of 2000 had I been following the commitments of traders. So that really had a big effect on me.
The light bulb went off in terms of what to...
In terms of some data that could really help me, yeah.
Right.
And so since then, I have used that very extensively. And since then, that's when my trading really started to be very steady.
Okay. So I don't want to back up just for a little bit because in the book you talk about trading during the time when Nick Leeson was blowing up the Barings Bank. And I know that this was kind of, if I got my timeline right, this was before your kind of steady trading, but yet you still had a great trade. Could you kind of, I love trading stories, and I heard your trading story, and I was like, I got to ask him about it. Can you give us a little color on that? Can you expand on what you mentioned in the book?
So at this point, I had convinced the bank I was working for, the brokerage house I was working for, to let me have a book and let me sort of trade a book. Yeah. And so I was. And I was trading mostly kind of Hang Seng, Nikkei, some JGB stuff. And the Leeson thing happened. And I didn't know anything about Nick Leeson. We knew something was going on because the vol on the Nikkei had gotten to like low single digits, which made absolutely no sense. So there was clearly something wrong there. But and I remember talking about it, but I didn't do anything about it. And then we found out, obviously, what it was that Nick Leeson was, filling this P&L hole that he had built up by selling options and using the premium that he was taking in as an accounting gimmick to fill that P&L hole, right?
That's right. Selling straddles works well to fix your P&L problem.
Right. If your people don't know, if they're not paying attention to you, right? So that blew up. And he had to liquidate. And the trade that I made on that was then, the Singapore government came out and said, we are liquidating this entire Barings portfolio right now, today. I mean, they told everybody,
right?
We're doing this today. So the Nikkei opened at I don't remember what the number was, but it was like a 15% discount to cash or something like that, and traded there like the whole morning, right?
Okay.
And I, went to my boss and I'm like, listen, man, this is a gift. These guys said they're going to be done with this trade today. They're getting rid of it today, right? So we can buy the futures and sell, do the cash and carry trade and make it for 15%, man.
So you actually did the risk arb. So up until this point, you were just trading futures, and you actually told them to put on the not the risk arb, the index arb. Sorry. Yeah. You told them to do the index arb. So did you go buy so you bought the futures at this big discount to cash, and then you sold the stocks. Did you sell all the stocks, or was there an ETF at the time?
No, we were selling the stocks.
Okay.
We didn't sell all of them, but I think we sold the 20 or 30 biggest stocks in the index or something.
Oh, so you just said, okay, we're going to go short the top, 70%
of
the market caps. Okay.
We weren't smart enough or even in a position to do it the real way, so we just did it as good as we could.
Okay, so you do this, and then does it bounce back the next day? And
oh yeah, right at the open the next day.
You're kidding. It was one day and it was gone.
Yeah, it had to be. They told us that they were going to be done selling the next day.
But so why don't you think there was why didn't the index ARBs take down the cash to the futures level?
I have no idea. Maybe they did. I have no idea.
Well, they
couldn't get their bosses to agree. You know what I mean?
Yeah.
People were scared. In the heat of the moment, it seems easy, right? But in the heat of the moment, people are like, oh, shit, I ain't touching that, man. We don't know what's going to happen. The world's going to blow up. The next day's going to blow up. Who knows what?
Listen, in the 1987 crash, there was a big discount to cash as well. But the problem there was that all of the houses that had been doing the index ARB had actually bought futures, sold stocks. And what had happened is they'd done it a couple of days earlier. And then as the market fell, their S&P 500 futures were marking to market. So they were having to come up with margin. But meanwhile, the stock sale, back then it was T+5, it actually was going to settle in a week's time. So there was a huge cash flow problem. And then what happened is all those guys got told, no, you can't do any index ARB anymore. And that's when that just completely blew out. It's probably something similar in this case where people were so scared and they were just like, no, you got to just stay out of the way. This bag's going out.
I mean, why take career risk? You know what I mean? Let's just lift the trade tomorrow, I guess, right?
Yeah, but it's a great opportunity for you. Okay, so now let's fast forward back.
Yeah, which is only because the guys that I convinced to let me do it probably didn't even understand it. So.
So fast forward back to the 2000, and is this the point where you go and you try to and you get it? Actually, not just try, but you get a job at Commodities Corp.
No. I in 2000, I went and worked for a prop shop in Chicago.
And so, had you already worked at Commodities Corp up to when was that?
No, I got a job at prop shop in Chicago. I left. I joined, I guess you would call it a hedge fund, although questionable, but a fund in New York City. where I worked at for about a year, and I left there at the end of the year, and they basically fired me. And I'm not kidding you, there were 5 people there, and 4 lost money the year I was there, and 1 made money, and that was me. And they fired me.
So
those guys ended up, by the way, going to jail. But so it was a good thing they fired me. But they fired me. I had no job. My wife thought I was a loser, and we were going to get divorced. And I went to a divorce attorney. I lived in Princeton area at the time, and the divorce attorney was like, and this is such a story of you just never know what's going to happen in life, But I went to this divorce attorney, and he said, "What do you do?" I said, "I'm a trader." He said, "Do you know Helmut Weimer?" I said, "I don't know him, but I know of him, having read Market Wizards 800 times, right?" And he said, "Oh, my wife is best friends with his wife." And I was like, "Okay. If you want to be my divorce attorney, get on the phone with your wife right now, and I want to sit down and meet Helmut Weimer." And the next day, I did. And I never worked for Commodities Corporation. I actually had interviewed with Commodities Corporation a few years earlier, and they didn't take me. But Helmut had just sold Commodities Corporation to Goldman, and he still had his office over there. So I sat in his office with him, and he got what I was talking about immediately, and he backed me with some money, and he brought me into what was then Goldman. So
you ended up at Goldman.
Well, they ended up matching what he gave me. And so I went and started sort of a CTA with Helmut and Goldman's money, which wasn't a lot of money, I can tell you. But
so for those who don't know, Commodities Corp is actually it was founded by Helmut Weimar and Amos Hostetter. I hope I'm saying that correct. And there's just like some famous folks came from there: Paul Tudor Jones, Louis Bacon, Bruce Kovner, Michael Marcus, Ed Sekoda, and Marty Schwartz. And I know you weren't there, you didn't overlap with any of them, but I'd love to just kind of get your impressions of trading with Helmut, what he was like, what the kind of anything you can give us in terms of color of that firm.
So I didn't trade with Helmut. I managed his money.
Okay.
And I did talk to him quite a bit. What I would say about Helmut is that he never once told me what to trade, made a comment on what I'm doing, nothing. It was always there if I wanted to talk to him, but was so professional in the way that he handled things. He to this day is some other people have done it since, but for a long time, he was the only person who ever bought my drawdowns. Right?
Oh.
Most people, you have a drawdown and they bail, right?
Yeah.
He bought my drawdowns 3 different times, and was paid every time, because he understood trading. Drawdown. If you believe that something is going to work over time, which is the only reason you're giving somebody money, if you understand the process and you believe the process is going to work over time, and you understand that drawdowns are a natural process to anything, right? Then you buy those drawdowns, and he did that 3 different times.
That's fascinating. That's awesome. That's great. Because usually everyone goes the other way around. They're redeeming you into the drawdowns.
Which is why they suck and he's great. No, which is why everybody else has horrible returns. I mean, truthfully, right?
Yeah, no, there's no limit of that.
It's just like what we do in the markets. They sell right at the wrong time when they buy. They chase it when you're doing great, and then they bail when you're doing horrible, right?
Okay, so you go through these periods, you manage money for different people and stuff, and now maybe we should kind of go to where, like, I'm just trying to think of how much more we want. Should we talk about like your next stages? Like eventually, let's go into this. Eventually, you kind of almost retire, if I'm correct, right? Like you sell the house, so you sell the firm, you no longer trade, and you find yourself living in Rhode Island on a farm. Is that correct?
I worked at a big hedge fund. I left and that was the first time in my life that I ever really got to a point. I worked there for like 5 or 6 years. I did well, and I left there. And that was the first time I ever really, in my life, had some form of financial security.
Okay.
I went and started my own fund and did that for about 2 years, and was having the dream of, I could be whatever, the next billionaire. I can go raise, all this money, and started this firm with all these people working for me and a huge, carry every month. And it ended up being absolute hell. And during it is when I actually did get divorced. So it just got to a point where I was like, screw all this. I shut it down. I got divorced. I moved up to Rhode Island, and I took about, I don't know, almost a year and a half off.
Right.
And just kind of, as I say, I kind of went thorough, and I bought a farm, and, figured I'd go outside and chop wood. And of course, the first day I went and chopped wood, I threw out my back, and that was the end of that. But, I just kind of took a year and a half off.
All right. And so what revelation did you come after that year and a half? Like, what brought you back to the market?
I mean, this is what I do. This is what I love to do. This is what I think, if there's anything that I could consider myself good at, this is it. So why not? Right? Like, let's get back into it. Right. So I went to a place that allocates money to traders, a prop shop that I had some friends that had managed money for, and they let me manage some money. And I started doing that, and I was pretty happy doing that, to be honest with you. But at one point, I had a friend who approached me and said, why don't I raise you some money? And I was like, I don't even have a company, man. I don't even have a CTA. I have nothing. I'm just one man trading this one account. But if you want to go ahead and try, then go ahead. And he did, and he was successful. So I started this CTA, which I knew how to do because I had done it before more than once.
Yeah.
And took this money in and have been now doing that since then. So it's been, I don't know, 6-7 years now for this latest CTA, and that's what I do now.
All right, now let's get into your kind of process and what you talk about, and why don't you tell us when Crowded Market Report came about, and like what the purpose of it is, and maybe kind of how it kind of meshes with your thinking, and just kind of give us a little bit of background in terms of that portion of your career.
I'm sorry, you were asking about the Crowded Market Report?
Yeah.
Yeah. Sorry. Yeah. So, when I was in Schwager's book, all of a sudden I started getting a lot of people sending me stuff like on LinkedIn,
Yeah.
like every day, 5-10 people every day. Right. Hey, Jason, can you teach me how to trade? Hey, can I come and work for you for free and learn how to trade? And, I do, and one of the things that I learned from Helmut is you do want to, and it's part of, I think, the trading lore, right? You want to pass the whole thing forward to other people, right? So I do want to do that, but I kept saying to these people, listen, I'd love to, but I don't know how I'm going to choose from 200 people. I can't mentor 200 people at the same time, right? I have a family, I have a job, I have a life. So I just don't know how I'm going to do that. And one guy said to me, well, why don't I start a web page and you could sort of centralize that? And I had always written for 20 years. I've been writing this sort of thing on the weekend that was really for me, that puts my thoughts down on paper. This is what I'm looking at. These are the trades that I'm looking at. This is what it's going to take for me to make the trade, that kind of thing.
Okay.
Just to keep me disciplined. And at one point I turned that, when I was working at a hedge fund, I turned that into a newsletter that went to like some of the portfolio managers there, and a bunch of them liked it. When I managed my CTA after that, a few of my clients were hedge fund managers themselves. And so I used to send it to them, and a few of them really liked it. So I said to the guy, look, if you want to start a web page, that's great. Why don't we we could just distribute this newsletter that I do every week, right? And that'll help people to understand. And that's what we did. And then he, along with that, started a Discord page, which I quite frankly didn't know what that was, being the old man that I am. But I'm sure it's just like a little chat page or whatever. So people started to join, and they get this newsletter, and we kept the price, very reasonable for people to be able to afford. And they get this newsletter, and we get on the Discord, and we talk about all these different things. And, I'm really trying to push the idea there. Like I beg people, like, look, I'm not trying to be a tip sheet here, right? If you're coming to me because you think I'm a market wizard and you think everything I say is going to be golden, right? You're doing it wrong, The things I'm trying to focus on with these people is what is actually important, right? Risk management, right? Having process, having discipline. These are the things that are important, not some guru telling you to buy and sell shit all the time, because that is not going to work, right? I don't care who it is, right? So I do put my trades on my newsletter because that's what it was based on from the very beginning, was for me to monitor. But, and I know that people try to mimic what I'm doing, but I beg them not to, because I'm like, it's not going to work, man. You didn't develop this process like I did, so you're not going to believe in it like I do, right? You don't have the history. I've got 20 years of trading this process, so I'm very comfortable with the drawdowns that come with it and the trades that lose and all. I'm very comfortable with all that. You're not going to be, because you don't know this, right? So you're going to come in and the first 3 trades you take are going to lose. And then you're going to stop and you're going to say, Shapiro's a moron. I wasted my money. And then the 4th trade is going to be a home run. And now we're 4 trades into it and you're down 3% and I'm up 3%. And it's always going to be like that, right?
Right.
So that is why you shouldn't, I beg these people, like, use the lessons that I have learned, right? I'm no different than you. I just might be a few years more advanced because of the years I've traded, right? So I've already gone through what you're probably going through. So why don't you just use those lessons that I have learned through this to enhance your trading, right? I'm always like, you trade you and use what you can learn here. And you guys have the advantage. I tell them all the time that you can use the stuff that I am showing you to enhance your trading. And you can also go out to 2 or 3, 4 or 5 other people, right, and use the stuff that they're teaching to it. And if you can get all these ideas to enhance your trading, I mean, you guys' goals should not be to get my returns. You should be better than me, right?
No, that's great advice. All right, so let's talk a little bit about that process. And from the book, you said the most powerful word in the markets is despite. If you hear a comment like, despite the increase in oil inventories being much higher than expected, oil prices closed higher. And that is the tape telling you what is going to happen. Why don't you kind of explain to us why you think that word despite is so important?
So it starts with, the fact that I'm looking to be opposite the masses, right?
Okay.
And I don't think that it's by any means going out on a limb saying that the masses over time lose money trading, right? If they're long only, they probably don't lose money because the stock market usually goes up, but they underperform the index, right? So that's losing money, in other words. But people who actually trade long short end up net losing money. So it's very simple for me. Like, to me, if the masses are going to lose money, then all I want to do is go the opposite side of the masses and make the money that they're going to lose. I'm not trying to outthink everybody, because I can't do that. I'm not trying to be smarter on the macro level. I'm not trying to be a better trader than everybody else. I'm just letting them tell me what they're doing, and I'm taking the opposite side. That's it. It's sort of like making markets in a way, right? So it starts with that. Then once you have that, once you have a reading that everybody is one-sided onto something, then I look for this despite stuff, right? So even when everybody is one-sided, I'm still not going to take a trade just because of that. I need a market confirmation, which, like I say, people should be using market confirmation no matter how they're trading, right?
Right.
You might think, hey, this stock is going up, but you have to wait until it confirms that it's going up, right? Like, what's the timing on it, right? And confirm can mean whatever it is means to you. It went above the 20-day moving average, or it went above the 50-day or the 200-day, whatever you want to use, right? There should be some form of confirmation into what you think before you actually act. So for me, what I use as a confirmation is this despite thing. I call it news failure, and that's actually a word that Helmut invented for me.
Okay.
But so despite, yes. The easiest one to look at is the lows in the stock market, because everybody follows the stock market. The lows in October, right, came on a day when the CPI printed the highest number of the year, right? And it was higher than expected, right? So despite the fact that CPI came in higher than expected, right, the market closed up that day.
Okay.
And that was the low of the stock market up to this point.
And so is it at that point that you start thinking about going the other way? Like, so from what
I don't think about it. That's right when I do it.
Okay. So you go and you wait for a situation where everyone's leaning one way. And then once the market starts to behave almost in the opposite way, that's your signal that it's all almost like all baked in.
Correct.
Right.
And again, the reason it's baked in to me is because the discounting mechanism is not price, it's participation. So why didn't the market go down when the CPI was higher? Well, because everybody's already short. That's why. So that's the discounting mechanism. So when they've over discounted in the positioning, that's when I go the other way. And I don't think that any of this really, and I think that my trading history proves it, doesn't necessarily put the odds that the market is going to go up or down at any more. What it really does, it puts the odds that if I get it right, the payout is going to be much higher than if I get it wrong. Yeah. Like my trading is less than 50-50. I get less than 50% winners, but the payout is like 4-1. So, and I think that's what a lot of people miss in trading as well, right? That's to me what it's really about, right? It's not about your percentage of winners. It's not about how right you are. It's about, can you get paid more on the ones that you're right than you lose on the ones that you're wrong.
Right. I actually watched one of your videos, and you mentioned that you said your trades have a 38% chance of winning. Is that just over time you figured that out?
20 years. That's what it's been. 38%.
Right. And then what would you think your risk kind of loss to win ratio is on your trades over time?
It's about 4-1.
Okay, so those are the actual numbers. So you lose
a little bit less than 4-1, 3.8 to 1 or something.
Yeah, so you lose 62% of the time, but when you lose $1, and then the 38% of the time you win, you make $4.
Correct. So lose $1, make 4. Lose $1, make 4. Lose $1, make 4, and let time pass.
And so when you're doing a trade that you have, let's just say, like, so recently you've turned bearish on the stock market. And I thought it was funny because you tweeted out the other day that you said, "Wow, I never knew how much engagement I get from being bearish on the stock market." And I was just laughing because doom always sells more. But one of the things that I want to think this through is you're looking for this. Have you got the news failure, and what was the news failure on that made you put on the short right now?
So a couple things that I would change what you would say. Okay. I didn't get bearish.
Okay.
My process got me short.
Okay.
Okay. To me, there's a difference, right?
So what is the difference? Why do you tell?
Because I'm not bearish at all. You know what I mean? But my system did get me short. Now, having said that, as of today, data comes out on Friday for me.
Yeah.
I'm out of that trade. So it ended up like I got short the Dow. It looks like it was about, I don't know, I might have made like literally 30 points on this freaking trade. And it wasn't even worth it because it took 3 weeks to make 30 points on this trade. And I was out of the money more than I was in the money. But it did take me out today. So I am no longer short. But yeah, that Thursday, I believe that it was, my data was set up to be a sell. And on that, I know it was a Thursday, July 27th. There was a reversal day in the stock market on the back of some economic news that should have been positive to the stock market.
Oh, so it was despite. It was a despite.
It's always a despite.
Oh, okay.
It's always a despite. So despite that news, the market closed down. My stuff showed that people were too long the Dow. This is the first time I got short stocks all year. And I got short. And it went in my face immediately for 3 days, and it kind of went for me. And this week it just kind of flopped around, and then the data came out, and I'm out of it. And I'm more. It gets into a little bit more esoteric stuff of why I got out of it, but I kind of have a buy in the Nasdaq and a sell in the Dow, so I can do both, or I can just go flat, And I just went flat. It's Friday afternoon, and I'll think about it this weekend. I'll go through my charts, I'll go through my stuff, and I'll decide what I want to do. So as of right now, I'm flat.
So, and it's completely on that participation, which you use the COT report. And you going back to your Margaret comment about, I'm not bearish. I actually just had a signal. So did you try to not have views all the time? Like, is it basically you're trying to not go and have like some grandiose view, and you're just saying, I'm waiting for this. I
think I always have views, but I don't trade on them.
Okay.
I trade my process. That's it, right? I trade my process because it's impossible, right? It's impossible, right? As much as you want to meditate and as much as you want to be Zen, and it's impossible to not have any views, right? And then my views obviously get biased by what my stuff is doing, as anybody will do, right? You can always make a bullish case, you can always make a bearish case, and you can always make it sound super intelligent, right? But it's all bullshit, you know?
So do you ever find yourself like having a view and then your system gives you the opposite signal and have difficulty pulling the trigger on that?
This one, if you ask me, I am not bearish the stock market at all here, right?
Right.
But I got short here. I got short a few weeks ago, right? And I'm lucky to have gotten out of it, quite frankly, without a loss. But I am not bearish in the least the stock market. I can make a bearish argument, which I did in my video last week,
right?
But I don't particularly believe that that's the high probability thing of happening. So yes, I was short, and I wasn't bearish whatsoever.
In the book, you talk about fading people, and actually, a lot of times you talk about either fading CNBC, Fast Money, or people that you talk to that are kind of always seem to be wrong. Do you kind of, how do you make that something that is a system as well?
You can't really.
No,
except that if the majority and the consensus is talking about something,
yeah,
there's a good chance that then that shows up in the positioning data, right? Like right now, okay, all I hear every single day, the single most consensus thing that I hear about the markets here is energy. Everyone is bullish energy here, right?
Okay.
Does that mean energy can't go up? It doesn't mean energy can't go up. To me, it means that the risk reward on being long energy is horrible here. But the COT is showing that people are excessively long energy, in particular, as it turns out, in heating oil, right? And I just put the heating oil COT chart on Twitter this afternoon when it came out. But so it kind of coincides most of the time anyway, right?
So you still wait for the signal on your systems as opposed to
always.
So you're not actually going and fading the guys on CNBC. You're just saying that on the whole that kind of corresponds to what you're going to see in terms of
and it helps. It really helps. You talk about the psychology of how convinced are you about the thing and all that kind of thing. It helps when people that I listen when the consensus is talking all the same thing and my data is showing the same thing, it helps a lot psychologically, right? Just because I've watched these people over and over time, over long periods of time, be wrong. And it's more about it's about two things. It's not necessarily one single person, but consensus. When they're all coming up, you can't turn on the TV right now, I'm sorry, and not have somebody tell you that they're bullish energy. I had the TV on today. There were probably 6 people that came on and said that. Okay. So it's a consensus. And then there's also on a few individuals, and that's more about personality type, right? People who consistently talk about how they know more than the market, right? And people that consistently show very typical behavioral biases, right, are people that you want to fade. This doesn't make them bad people, right?
It just makes them good fades.
That's it. Plain and simple.
Yeah.
Right? Doesn't mean that they're not great people to hang around with. I mean, I couldn't, being sort of contrarian anyway, but doesn't make them fun. Mean they're not fun. It doesn't mean they wouldn't be good to play golf with or whatever. It just means that they are exhibiting very typical behavior that is fadeable. That's all it means.
Right.
So there are a few people that fit into that very, very, very well, and so I pay attention very closely to them.
When I was reading your chapter, one of the things that kind of struck me was how similar you are to another one of my kind of idols, which is Mark Fisher, the energy trader. And he says, if it makes sense, it doesn't make you any money. And I think that part of people not understanding that the more obvious a trade is, the more likely it is to be priced in is difficult for them to kind of grasp their hands around. But I think when we had 2021, because we had such a fierce rally in a lot of stuff. I found it difficult at the very least that a lot of the things in terms of the markets being priced in and being more efficient weren't actually working. And in that, in the old days, like you see CNBC go on, someone gets on CNBC, an analyst, and they talk about a stock and it rallies $2, but the reality is nothing's really changed. By the end of the day, it kind of comes back in. But 2021 was kind of just an unbelievable period because it just kept going. And it didn't seem like the things that had previously worked just all of a sudden didn't work. And something that could get overbought, and it seemed like everyone was already in, just got more and more people in. Is this a case where you're looking for that move, the price action to confirm keeps you out of trouble on those kind of years?
Yes. I mean, I could get into what you're saying first anyway, but the answer is absolutely yes. I think one of the key things, and I miss a lot of trades, okay, because of this. I miss market turns all the time, but it keeps me out of trouble. And that's so important. Not losing money is just as important as not making money.
It might even be
right?
more important.
It might even be more important. That's right. Yeah. So it keeps me out of trouble. I missed a trade just barely recently, okay, where on cocoa went from just this week over 3,600 to 3,300 in 4 days. Okay, that's what, a 10% move or whatever, right? Yeah. And I missed it because of one little tiny thing in my system. I missed it. Okay, it happens. I also wasn't shorting it from 3,000 all the way up to 36. So for that same reason. So first of all, Mark Fisher obviously is a trading legend, right? And he's, in my view, absolutely right. If it's obvious, then where in the world can something be obvious that you're going to make money, right?
But it was so frustrating in 2021 because it actually seemed to work.
No, but did it? Did it? Because in 2021, sure, the market kept going up, but all that crap topped in like what? March, April?
Yeah, I guess so.
All the crap that all those people were chasing, and I know people that were doing it too. I have friends who were all of a sudden trading the market and all that stuff, and they weren't buying S&P, man. They were buying all that crap.
Buying space.
And all that crap started going down very early, right? By like the second quarter of the year, it had already been going down, and then by the time the end of the year came, that shit was down 60, 70%, right?
Now,
and just as an aside, we got short, or I got short. I wasn't short for all. And again, this is not me. I always say it's not me. It's COT, right? The COT had me long for the majority of 2021. It flipped me. I don't remember exactly, but it flipped me from like NASDAQ to S&P and then to Russell, and got me short in November of 2021.
Oh, that's true.
And that's not me. You know what I mean? Yeah. This is just the data. So that's when it got me short. So like you say, you might have been seeing that this is ridiculous, but it would have kept you away from doing that all the way until November.
Okay, now let's talk a little bit more about the COT data, because I know there's a lot of folks that are highlighting the fact that the bond short is as big as it's been, right? But one of the problems with some of the COT data is that there's different types of strategies. And although I have no doubt that the CTA guys are short fixed income, there's another group of hedge funds that are actually short the futures because they're doing the basis trade. And I think that that's actually messing up the data. I was wondering, do you agree with that? Or do you think this COT data is kind of, don't second guess it. If it's showing that much short, it's that short. Like, do you think that that's real? And how do you account for things like the basis trade?
I think it is real. The amount of shorts on fixed income from that point of view, let's take the commercials. The amount of longs in fixed income and commercials is, and has been for a number of months now, completely out of control. The largest ever. Okay. So you would think that would mean I'd be looking to buy. All right. Except there's three people or three groups in the commitments of traders, right? There's commercials, there's large speculators, as I call them, which are people that have to report their positions.
Yeah.
And then there are small speculators, which is everybody else, right?
Okay.
And the small, and I need, for me to put on a trade, if I'm going to go long, I need the commercials to show super long, and I need the small speculators and the large speculators to show super short. What's kept me out of this particular trade is the small speculators have not gotten short; they've been long the whole way.
Right. So could you not?
So I can't get long because of that.
Could you not argue that the part of the reason is that because that's actually the speculative position, because some of the, let's just say, the basis trade is affecting the large speculators because the large speculators are actually short against a basis trade?
I don't even want to argue because the data is what the data is.
So you just don't care.
Yeah,
You just
and I have been making that argument for months in my newsletter. I've been saying, yes, I see this. Okay. But first of all, the small speculative thing is keeping me out anyway, so I don't care. But let's talk about it just for the sake of talking about it. There's no question that the basis trade is going on. And I don't even know what the hell the basis trade is, quite frankly. I ain't smart enough to understand it. But I know it's out there because I read about it and I hear about it, right? And on top of that, now it goes right back to the other thing you were talking about. My number one favorite public guy, Fade, my number one fade by far, okay, has for the last 3-4 months, this is the same guy who was shorting the stock market the entire way up this year, shorting the video the entire way up this year, right? Shorting the Qs the entire way up this year, gave up on all that and started doing the same exact thing, getting long TLT. And then TLT goes down, he's buying more, and he's buying more, and he's buying more, right? So when I look at all those things together, right, first of all, I can't do it anyway because of the small speculator situation, right? And when I test this data on fixed income, small speculators are the worst of everybody. So I ain't getting long with their long. I'll get long when they get short, right? But on top of that, I've got this guy who I love the fade who's buying TLT the whole way, right?
Yeah.
So it's kept me out of that trade.
Okay, I get it. So why even bother with the large specs if the small specs are better? Like, why not just completely run your systems on the small specs?
Look, the combination of the three is the best.
Okay, I see. Right, I get it. Okay, let me just. You also have a story in your book where you overrode the system, and I want to tell you a quick kind of aside. When I'm a Canadian, and when we automated our market on close, we figured out a way we could actually go and read in the imbalances, and then I made a program that would just buy them and like buy the ones that were going had MOCs and then sell them into the MOC and sell the short the ones that were for sale and buy them into the MOC. And I used to laugh because some days I would get nervous. And I would go, oh, no, there's a big rebalance. Let's not do it or whatever. And the guy I would trade with, he goes, there you go, adding negative alpha again. And because I was overriding the system. Do you ever override the system? And do you think that you actually add positive alpha and you're not like me?
Do I ever override? Yes. I would argue right now I'm overriding my system because I have a signal to be short Dow still, but I covered that today. But that's because I also have a signal to be long NASDAQ, right? So I just choose to go flat. So in a way, that's overriding the system. My NASDAQ signal hasn't given me the buy yet, right? It's set up to buy, but it hasn't bought, right? So theoretically, I'm supposed to be short Dow. Not theoretically. I am supposed to be short Dow, okay? But again, on top of the fact that my favorite fade is continuously shorting the Qs. So, and that's great. This will give me the chance to buy the NASDAQ when the time is right, okay? And I feel strongly that that's going to work. But that on top of the fact that the market's been going down and the Dow hasn't gone down, so the tape has not been good, all these things have just led me to sort of, I think, what you would call override the system here.
Right. But
does it happen? Things like that will happen a few times a year, 2-3 times a year, right? Does it work for me? We'll wake up Monday morning and the Dow will be down 1,000 points. Okay. So, I don't know that it works for me necessarily, but it helps me with my risk. So therefore it works for me.
Right. So are your overrides always not taking signals or flattening a position and never going the other way and actually adding a?
Yeah. Like I don't take trades. Right. I will not open a new trade that's not system related. You know,
I get it. So unless the
that
system
I would never do. Sometimes I'll take some more, based on my portfolio and what my portfolio looks like.
Yeah.
I might take something off if I have too many correlated things going on, right?
And actually, that's
Or
my next.
based on the,
That's my next
Go ahead.
question. I wanted to ask you because you mentioned the correlations. Do you actually measure them out? Like you mentioned that you'll reduce risk if your correlations are too all one-sided. Are you just looking at how your portfolio behaves? Are you analyzing it, putting it through something, or is it just kind of a gut feel? Like, how do you go about changing your portfolio when you feel like your systems have you too lopsided one way?
I think that I used to run it through, value at risk and all that
Yeah.
stuff, but I found that to be crap.
Yeah.
Okay. It's too slow. By the time that thing figures it out, it's too late. Right. So I like to believe, I don't know if this is true, but I like to believe the reason I sit here all day and watch the markets, right, when I really don't need to because I'm trading a process anyway and it is what it is, right? But I like to believe the reason I'm doing that is because I'm watching correlations, right? And I'm trying to understand correlations across markets based on sort of how people are looking at the macro thing and what does the dollar mean to bonds, mean to stocks, mean to commodities, right? So that I can kind of have an understanding for the correlation so that I can then watch my portfolio so that it doesn't get too one-sided on a correlation thing, right? It's obvious to say, and truthfully, this isn't always obvious, and it wasn't obvious earlier this year, but in general, let's say I get a signal to buy the S&P, buy the Dow, buy the NASDAQ, and buy the Russell, right? Am I going to buy full positions in all four of those things? I mean, no, because it's pretty much the same trade, right? So on a correlation basis, same kind of idea. It really comes down most of the time to risk on, risk off type of thing, right? I mean, I like to trade the grains and things like that because there really is no correlation. So it offers me sort of non-correlated trades in there. But if you're doing the financials and some of the major things like gold and all that, there's a correlation across the fixed and the dollar and all that. So I like to pay attention to that because I then adjust my portfolio that way.
And
right?
again, do you only reduce as opposed to add positions?
I reduce.
Right. Okay.
I might reduce, or I might say I get Dow, S&P, NASDAQ, all of these things at the same time. Yeah. I'll either put them all on at a reduced size, is usually what I'll do.
Okay.
And that depends on whether I have other trades on that are sort of risk off trades too, right? If I have some risk off trades on, well, then maybe I can full size all those because I have the risk off on the other side, right? If I don't have the risk off on the other side, well, then I'm not going to fully position. And arguably, if they're all showing the same thing, that people are super short all these indices, then the odds that they're going up is probably greater. So I probably should ride the full position all of them, but I don't do that because I always assume I'm going to be wrong. So it's all about risk to me, right? If I'm right, I'm going to make a shitload of money anyway. So if I'm wrong, I got to make sure that I don't do anything stupid.
All right. You said in the book,
you can always, it can always be wrong. I don't care how good your system, you know what I mean?
Yeah.
It can always be wrong, and you better be ready for it.
You said in the book, money isn't everything, and then happiness was your true goal. And you managed to stay happy through some kind of very tumultuous times. Was that like a decision you made, or is that something in your makeup, or was it the way you were raised? I'd just love to hear kind of your thoughts on why you were able to stay happy even as you went up and down with the yo-yo.
I think that 9 out of 10 people that you would ask right now would tell you I'm miserable.
No, you're not. I can tell you're not. And not only that, you kept getting up. Like you blew your account up probably more so than some, and at the very least, and yet you kept getting up for another pitch at the bat. Or the bat.
Yeah, I mean, what's that saying? Something is the I forget, but in other words, there's I had no choice. So you know what I mean. We can romanticize it, but the bottom line is I had no choice because I wanted to eat, and nobody was giving me a job because I was nobody wants to sit next to someone that's contrarian about everything that they have to say, right?
Okay, but you're also just selling yourself short, I think, because you went to a Buddhist monk place for a month. You've thought this through. You've made a decision about how you want to live your life and stuff. Well, can you tell us a little bit about that? Like, it's not everyone that goes for a month and doesn't talk and hangs out with the monks.
I think it's important. I mean, this gets into a very deep philosophical conversation, but yes, I think that it's important to, and I don't think that I'm inventing anything here, okay? But it's important to keep things in perspective, and one is the other. You know, there's a question here. What would you believe was it, if there's any ingredient you used to believe was essential for success professionally and personally that you no longer think is crucial at all, right?
Yeah.
So I think the answer to that question gets into what you're getting at, right? What I have found, and I don't really believe that anybody who's young could understand this, but as you get older, as I've gotten older at least, I have come to learn, and I don't mean this in any kind of religious way or any kind of philosophical way. I think it is fact, right? That the more that you give in this life, the more you receive, right? When you're young, you think the more I take, the more I receive. I have to go out and take it. That's how I'm going to get rich. That's how I'm going to be successful. That's how I'm going to have all the things that I want, right? I'm going to go out and take it. And I thought that too when I was young. And the more I've gotten older, the more I have come to believe beyond the shadow of a doubt that the more you give, the more you receive. I think you leave this world, it's efficient. So if you are taking, you're going to have taken back from you as well. And it's not to say that people aren't greedy and haven't taken and have become billionaires, and that looks great, but they're miserable. The family hates them. They have no happiness, right? But they have $1 billion. Terrific. But I have found that the more you give, the more you receive. Not only, yes, in business, okay? You want to give as much as you can to your clients, people you do business with. I always say, I want people that I do business with, in every sense of the word, to make money. Because, you know, that's what they want to do business with me, right? Nobody wants to do business with someone they don't make money with, right? I can sit there and squeeze my brokers to the last penny, right? But then as soon as something goes wrong, they're going to be there to help me, you know? The guy in The Godfather said it, right? What was it like? You know, he's still around because everybody he's done business with has made money, right? So I think that's, and people aren't going to listen to this. They're going to think I'm some sort of religious freak, which I'm not. I'm not an atheist, but I truly have come to believe that the more you give, the more you receive. So I'm trying to go out there and help and give to as many people as I can, wherever I can. And it's not to say that somebody, and a number of people, won't take advantage of that. They'll take what you're giving them and they'll use you, and then they'll screw you. Yes, there are people like that, but you know what? If that's the way they're going to approach stuff, they're going to have that come back to them and get screwed. Right. I promise you. I've seen it again and again and again, right? And I didn't do this when I was raising my kids. I wasn't great with them when I was a kid. I was in a bad marriage and all that, but you give to your kids, and you will receive love. You give to your wife, which I didn't do to my first wife because we hated each other, but I try as hard as I can to do that with my second wife. Give. I live to give to her, and what I get back in return is just unmeasurable, right? And it works the same way in business. And even this whole crowded market report that I started, people are like, oh, you know, why are you doing this? Why are you doing this? I'm like, look, man, I am trying. Whether I'm good at what I do or whether what I do makes sense or helps people, I like to think it does. Maybe it does, maybe it doesn't. But I am trying to give to people. They want to make money. They want to learn how to trade. I think I know a little something about that, so I'm trying to give to them, right?
It's like
it's part of this whole thought process. So that's really what I believe in. I'm sure people will think I'm some sort of loony, but the proof is in the pudding, right?
Yep.
When I started to take that approach in life, things got immeasurably better for me.
It's the famous song, the Beatles, The End. It says and in the end, the love you take is equal to the love you make. Okay.
100%.
All right. So let's go with our 5 questions. Let's start with your favorite book, your favorite investment book. Sorry.
To me, the Market Wizard books are,
yeah.
I understand I'm in one of them, but in particular for 3 Market Wizards books, I think it's Market Wizards 1, Market Wizards 2, and Hedge Fund Market Wizards, to me, are the best trading books you could ever read. My process of trading, I like to believe, is just my conclusion to Market Wizards 1. That's all it is. So all these guys talk about. Don't fight the tape. Be contrarian as possible. Wait for market confirmation. I didn't invent any of this. It's all right in that book.
Right.
And who better to take advice from than, Kovner, Tudor, Marcus? I mean,
Got it. All right. Let's talk about Byron Ween's surprise. Byron Ween had his famous kind of year-end surprises where he talked about something he thought the market was giving a 1/3 or would give a 1/3 chance of happening, but he actually thought there was a better than 50-50 chance of occurring. Do you have a Byron Ween surprise for us?
I think that the big surprise here, to me, is still the idea that people still think inflation means the Fed's raising rates, and that's bad for the stock market. So lack of inflation means the Fed's going to stop raising rates, and that's good for the stock market, right? I think that the surprise, because that's the way they're thinking, is that the most bearish thing that happens here is the Fed starts cutting rates. I truly believe, and I was way early in believing this, okay, because I was saying it last year that the market is going to top when the Fed stops raising rates, and I thought that was going to be last October. Well, we're now entering this October, and they still haven't stopped raising rates, right? Yep. But the story remains the same, even though it's a year later. I think the market is going to top the very first time they cut rates. Now, first of all, the problem is they're not telling us that, right? It's going to be a long time before they cut rates. So therefore, the market may not top for a very long time, right? But I think that's the surprise, that's the most bearish thing that can happen is the Fed stops raising rates, because that's when you're going to get, that's when you're going to get the yield curve go from inverted to the other way, right? Which means that, and you're already starting to get that, right? 10-year rates where people really borrow money, 30-year rates where people really borrow money are going to go up. And that's when you're going to get your recession that everybody's looking for. And that's when you're going to get your stock market to go down, right?
Yeah.
It's when they cut rates. Right now they're raising rates, so the curve goes inverted because everyone is looking in the future and discounting in that inflation will go away and growth will go away. The second they stop that, and you see it every time. Every time there's any rumor that they're going to stop, gold goes up, bonds go down, right? So I think that's the big surprise. Cutting rates is the worst thing that is ever going to happen here.
Okay, so now John Cox used to say that you shouldn't invest on what's on page 1 today, but what's on page 16 on the way to page 1 tomorrow. Do you have any trades that you might get the Don Cox seal of approval?
I think that same one. I think it's the same answer.
All right. And what advice would you give to a young person starting in the business today?
Law school.
Law school?
Yes.
Why law school? Like avoid our industry?
Yes. Go to law school. That's the advice I would give someone that wants to start in this industry. Go to law school.
Okay. Now we're going to
make a bunch of money as a lawyer and take your savings. And if you want to trade, go ahead, right? But in the meantime, you have a nice income as a lawyer.
Yeah. Well, I think that people underestimate when you're learning trading how difficult or how much it helps to have that nice income that you can rely on. Right?
Without a doubt. I think people's view, especially a young person, including me as a young person, is just nowhere near reality. I don't think people understand how counterintuitive and how difficult this whole thing is, right? It's not like, I'm just going to put money in the market, and the fact that I'm putting money in the market means I'm going to be making money. Wrong, right? Over 95% of people lose money doing this. You can spend hours and hours and hours and hours a day and lose money. You can't do it as a lawyer. You're booking $400 an hour when you're a lawyer, one way or the other.
And sometimes, right? People figure out ways to take advantage of those 95% of them losing by creating systems to fade them systematically.
They try.
All right. So now you've already mentioned the question that was asked by the Toggle founder, Jan, last week, because we're playing this new game where we have kind of a pay it forward question, but he had 2 parts to his question. So I'm going to play his asking both questions. And I think you've already answered the first one, but the second one you have to answer. So let's first play it. 1 second. Here we go.
So I'll give you 2, and you can then decide which one you think is more applicable, since I don't know who your guest is going to be. But the first one is more serious. The second one is a little bit more fun.
Okay.
The first one is is there any ingredient you used to believe was essential for success, professionally or personally, that you no longer think is crucial at all? So like something that you've changed your mind on, something that people told you was absolutely critical, and now you think it's not important at all.
That's a great question.
And then the second one, which is a little bit more fun, is like if you had to eat the same meal for the rest of your life, what would that be?
All right.
The first one we kind of answered, although I would add to that fundamental analysis.
Okay.
Would be my second answer to that first question.
Meaning that you thought it was important and it's not nearly as important as you thought?
Correct.
Okay.
Simply because the market discounts it in. So what value does it add, right? Paying attention to what others are thinking as the fundamental analysis is important, but doing your own fundamental analysis and thinking that it's going to be better than everything that's out there is ridiculous in my view. Okay. The second question, if I had to eat the same meal for the rest of my life, what would that be? I don't know. I eat a peanut butter and jelly sandwich pretty much every single day.
Come on.
So let's go.
Is that what you eat at lunch every day?
Just about every day. Yeah. So let's go ahead with that one. I've lived on that since I was in first grade, so we'll keep going with that one.
Okay, so now you got to give us our question for the next guest.
So if it's an investment person, or even not, but I always ask people, what are you doing that's different to what other people are doing? Because otherwise, how else are you going to add, extra returns if you're not doing something that's different?
Okay. We're gonna put the screws to the next guy. All right. Listen, Jason, it's been a real pleasure having you. Why don't you tell people where they can find you and the Crowded Market Report and kind of give us the whole spiel?
Yeah, so our website is crowdedmarketreport.com. They can also go on YouTube. I do videos. I try to do them at least once a week, or I try to do them once a week, and those are all free. Crowded Market Report on YouTube, also on Twitter. Trying to think what the Twitter handle is, but it's because there's been a whole bunch of people that have made fake ones.
Do you want to do your own? Because I can give you yours.
Please.
Are you okay? So let me just look. Because here you are. You're at the crowded _MKT_RPT.
Right. So on Twitter there too. I don't, I put certain things on there a little bit, but I think I do a lot more on YouTube because I put these 10-minute videos together, and most of it, it's not talking about here's what the market's going to do. It's more about here's what I think the market is about, right? That type of thing. And then, like I say, the newsletter and all that, and the Discord is all available at crowdedmarketreport.com. And we also created, you can get commitments of traders charts on the internet for free. But we created some really, really good charts. I have to say, I didn't do it. The guy who started it did, my partner. He created some really good commitment of traders charts because the ones we were using weren't that good. And so he went out and created some really good ones. And that's part of what we do on there too. So
that's terrific. Well, Jason, it was a great getting to know you, and I really appreciate your time. Thanks for coming.
Yeah, thanks for having me. It was real fun.
All right, Patrick, it's time for talking charts. What do you got?
All right, let's just review the top 3 things we were watching a couple weeks ago. Inflation numbers. They more or less came in line, except for the PPI, which came in a little hot. Anything that you took away from it?
Oh, they were banging on the screws. There's really nothing. Yeah, you're right. PPI came in a little hot, but on the CPI is the one to watch, and it was nothing. But what was interesting was that even though they were banging on the screws, the stock market sold off. And I thought that was very telling. We'll obviously talk about that a little bit more.
Yeah. All right. Number 2, we were watching the ISM numbers, and they certainly are weakening right across, even globally. Things are slowing down on those fronts, but it wasn't really a market mover, but just more of the same, which is just the economy continues to slow down a bit. Well, I guess raising interest rate does that, right?
Yeah, and I don't think that you're right when you mentioned that they wasn't a market mover. It didn't end up being that big a deal.
And number 1, we were looking at those jobs numbers, and they just came in line. Actually, nothing new there. It's my intuition now is that the jobs numbers won't actually break until we're already in some sort of a recession. So like staring at this week, like month after month, is almost a waste of time. It's I think gonna be a lagging indicator. When they're finally a break on the jobs numbers, it'll be already too late. The market will already have corrected a good chunk. That's my speculation.
The contrarians might say that this is we're due to have a big bad jobs number next month then. So you finally gave up on it.
Finally gave up on it. Top 3 things to watch. Equity markets, are they topping? You know,
why did you put this in there?
I'm because I'm not
put this in there.
Listen. I never said they are topping.
I know. But you think by putting a question mark that somehow the market gods don't know that you think that they're topping?
All we're doing is just observing, Kevin. And what we're doing though is just asking the question. Like they certainly we've seen price action in the last week where we see these 50 S&P point rips on the upside. And then within hours, they give it all back. Somebody is hitting the bid. And there's definitely some selling and particularly a few sectors. We'll talk. Let's quickly just look at actually, we'll look at it when we get to the charts. But
okay, so what's number 2? What are you watching for number 2?
Yeah, so number 2, we're going to watch those FOMC minutes. And it's coming out next week, and we're just going to see whether or not anything has changed in Powell's stance. Obviously, it's not a press conference.
That shouldn't be number 2. But anyways, number 1, what is it?
I was running out of things.
I know you
were. Number 1, we have Jackson Hole Symposium, and I had to add the BRICS.
I know. So the reason that you had the FOMC is because you wanted to put the BRICS summit in there, and I laughed at you because I know why you wanted to put the BRICS summit in there. Because you think there's going to be a gold currency, and that this is going to be the start of this new thing.
Oh my God! You know what? You're killing me. You know what? You know, you're like back in high school. You're in that cool kids club. Yeah, you know what you do is, and you like to just shit on everyone. And it's like if you don't look,
you're in the
you guys.
I
ain't with no cool kids. I'm looking around. I don't see any around me.
At lunchtime and doing boring stuff.
No, but look, I think irrespective, there are a lot of things happening on a much larger global geopolitical scale. Maybe they're not going to be immediately market movers. I actually don't even know, even if they announced a gold-backed currency, whether that would be a huge mover of gold right off the bat. I mean, I think
Patrick, if they announce a gold-backed currency, it is going to move the markets. There is no doubt about it.
Yeah, but obviously that it's still up in the air. But you know what? It's worth paying attention to because you know the geopolitical tensions continue to heighten, and polarization is happening, and there's more and more incentive for Russia to be pushing alternative ways to settle trade with all the sanctions. I think that if it's going to happen in one of these meetings, something's going to be announced. I don't know whether it's going to be a gold-backed one. Obviously, that's been the rumor. But it'll be look, the meeting's coming up, and it's a thing to watch. That's what we're listening.
That's true. But let's face it. You think there's a chance. You're like what's his face in Dumb and Dumber. So you're telling me there's a chance. You're telling me that there's a chance that they're going to announce a gold-backed currency.
Yeah. Anyway.
Yeah.
Okay, let's go.
Happening.
All right.
And I'll tell you why it's not happening.
Okay, tell me why.
Because if it was happening, then how many people would know about it ahead of time? Like how many countries are involved there?
Plenty.
There's literally like tons. How many people would have to know about it? You would see it in the price of gold ahead of time.
Okay. Where I'll push back on you is an announcement of a currency doesn't mean the implementation of the currency. Like they might announce that there's a timetable for implementing it.
Yeah, and it'll be like 3 years from now or 5 years from now.
Yeah, whatever. Well, exactly. But I actually think that the market would already be moving if it was going to be something that was like a shocker where we're implementing a currency next week, which I doubt it. But the thing is that they're moving toward that, so they're going to probably put out some sort of a timetable for it.
Okay.
Well,
Maybe you're
we'll
right.
see.
Maybe
All
it
right.
affects it. Maybe it actually ends up being important. The other thing, Jackson Hole, I think it's going to be a complete snoozer. I don't think Powell's going to say crap. What is
but you know what? All of these look, you know what? Everyone's been focused on obviously the Fed because it is the center of the universe. But ultimately, there has been a coordinated central bank action of raising interest rates right across the board. Like last month, they all raised interest rates. And so you're seeing that this is a very much something that they all talk about in their little Bank of International Settlements country club. And
the special meetings where they all decide on
the secret ones.
Exactly.
But
I have a theory about this as well. People all have these kind of crazy ideas that these banks are all colluding together. They don't. In regular, like normal, non-stress times, central banks barely talk to each other. They don't care. I'm doing my thing. You're doing your thing. It doesn't matter. When the shit hits the fan, I will completely agree with you that they collude together to stop the panic.
I think that they want to avoid beggar thy neighbor kind of stuff, and therefore by them advertising that, let's say the Fed is going to go 25 points, so that they don't stir up the currency markets and create all sorts of different carry trades and stuff, then all of the other central banks have to evaluate whether or not they're just going to stay in line. Obviously,
but
this
they
is
don't-
not.
But
It's
they
not
don't
like one
collude. Is my point.
No, I'm not even saying
Yeah.
they're colluding, but the fact is that there's intention behind it, which is that they want to maintain some sort of stability. And if they're going to let the Fed go punching interest rates higher while they, let's say, hold interest rates lower, then they're going to cause all sorts of currency.
Isn't that what's happening with Japan?
Well, Japan is let's talk about that. Look, let's get to the charts here.
Okay.
Interesting. First thing that is worth observing on this S&P 500, and we'll get to currencies in a moment, is it's now no longer like one of these quick little 5-day corrections. One of the early things I was speculating that it could have been one of these corrections like we had in June, where it's like 100 S&P points over 5 days. It pulls back, gets bought on dip, and slingshots it to the next leg higher. Now, we're already almost 2 weeks into a corrective price action, but this has not yet turned ugly. I mean, if you even look at, for instance, the February market sell-off, in the first, let's say, 10 days, we were essentially down like 250 points in a quick, rapid fashion. Here, it's been a much softer, 170 points. And so it's been pulling back. The bigger question, is there still a topping formation to be had? Now, this is an important part of the question I asked in the top 3 things, because just because we've had a correction of this huge advance doesn't mean that there isn't a topping formation. And topping formations technically can be double tops, head and shoulders patterns. There could be, like Kev, let's think about the pain trade. What could fuck over the most amount of traders? Well, what if the market ripped back to the highs and prairie dog the highs, just drawing everyone to chase, and then they cut the feet out from underneath it and give it all back in a matter of days? Like that kind of price action is actually the typical things you see at market tops. You see a lot of fake outs, a lot of rallies that don't stick, and people hitting the bid on any move higher. And therefore, while I do think that we're probably, the way I would say is that the majority of this market advance is probably, behind us. Let's say this is the 8th inning. It doesn't mean that the market can't go and retest the highs here in August or do something to kind of just fake everyone out. It's almost too easy to be bearish here. And so I wouldn't be shocked if there was a double top retest or something like this. But the other alternative as well is that we have using the analog of the February March sell off, right? Like this little pullback of 300 some odd points. That could send us down toward 4,300 over the span of the month of August, but that could still easily be bought on dip and send it right back to the highs. So I think that the summer may very well end up being far more choppy. Even though I ultimately think that far enough down the road that this ends bearishly, I just don't think it all has to happen here in the month of August.
Tonight at 11.
Couldn't resist.
Nah, that's all right, bud. It's inevitable. Doom. All right, let's move on. What I wanted to just talk about some of these factors. Like I wanted to touch on this is the XLF, the financials over the SPY. And you can see that the SPY has actually been somewhat weaker here. And the other thing that obviously energy has been materially outperforming, and there's been a substantial rotation into the energy plays. But it also, what's on a relative basis suddenly getting a little bit of love is money flow into the healthcares. So there's a little bit of this, at least in the energy and healthcare space, you're getting a little bit of rotation in here. But where you can see the distribution, I read your piece, Kev. So I know you're shocked, but like you can see the technology space is very distinctly rolled over on a relative basis to the S&P, right? And so the tech names are definitely going through a distribution cycle. And so there's some sort of rotation going on under the hood of the markets. And we're going to probably see more of this here in the weeks to come. Any comment on that?
No, I'm just still amazed that you read the piece.
I know it's rare though. It's rare. Don't get your hopes up. That happens.
It was
more.
a bearish piece. So,
I was like, well, that Kev's bearish. Let me read it quick. All right. But what's interesting, the NASDAQ, while it's been pulling back, hasn't been really doing anything abnormal to what the S&P has. But what's interesting is that the FANGs are still a mixed bag, because while obviously Apple ate it and Microsoft has continued to sell, which are obviously two of the big behemoths, but Google is up right along its a stone throw from its 52-week highs. Amazon still holding not far from that nice earnings gap that it had on the upside. And even Meta, which is starting to get a little heavy, is still only a week off from having made a fresh new high. And so the question is, are we going to see a scenario where many of these FANG names all start to sell? Because right now it's not a broad basket where there's just people hitting the bid on all of them. Even like, I guess Nvidia and Tesla have gotten a little bit of selling recently. Like Nvidia is certainly off of its highs, heading down to some support lines from June. And Tesla as well, obviously giving a retracement back down to those June lows as well. But certainly it's the Googles and the Metas and stuff that have been holding this up.
Yeah, I don't know, Patrick. Like you're right that the Google doesn't look as bad as some of the others, like as bad as Nvidia, but they're all still up on a stick. So. And the one thing I do want to go back to is your comment, the tops are volatile affairs. And people forget that what happens with tops is you get that kind of 5% correction, and then it rallies right back up to the previous highs. Maybe even, as you say, goes to a new high, sucks everyone in, and then it's right back down. That is what a top, it looks like. It's not easy. It's not easy to get a top because of that kind of extreme volatility that you get during those periods. So
sometimes, but it's not the common thing. sometimes, like for instance, think of how the sell-off on the COVID turn happened. It was just, it turned and
But that
just
was
went.
a little different. That wasn't a sell-off because stocks were fully valued and the bull market was coming to an end. That was a sell-off because of a new kind of exogenous
variable
event.
introduced, something people didn't see coming in it, and they had to be repriced in. And that's and generally, far more often than not, markets go through a topping process. And you know, like it's a good reminder is, even though I don't think we're going to see a great financial crisis, but if you go back to the 2007 topping process, you know, those credit hedge funds at Bear started blowing up in the summer of 2007, and the market got slammed 12% to the downside, and then in October still managed to make a new high. In spite of many of the financial banks already 20, 30, 40% off their highs, the S&P still managed to make a higher high.
And I think the stupid home builders went up to new highs as well.
Oh, stupid.
Well, no, they were dumb at the time. Like go look at it. It was.
But look at them now.
Yeah, well, got shaken off that stupid thing.
But this time with mortgage rates reaching 23-year highs in the U.S., like, I you know, the demand for new homes got to be at all-time highs, right? Like this has got to be a great
nobody's
place.
selling.
Yeah.
It was a great trade. Like you laughed.
Listen, it's been great. You know,
and then I got shaken off because I listened to all the Doom at 11 guys.
I'll tell you. Tony Greer came on. I did that Market Huddle Plus with Tony, and he came in there pushing the home builders, and I was like, you know what? Like, I wasn't trying to push back hard, but I certainly didn't put any money in it. And Tony's was dead right. Like he's been pressing this trade, and he caught the whole thing, and great for him. And like I don't know why I'm so reluctant to jump onto these trends when they're going like that. Just
those blue
I can't seem
hard
to
for you to write.
I go long stuff.
Gold.
Oh my God. All right. So anyway, let's that's what I wanted to talk equity. So let's move on to the currency markets. And what's interesting is the dollar is pressing, multi-week highs right to the top of the 1 week range. But what's amazing is that we've completely erased, almost completely erased that entire July puke on the downside. And really, that sell-off was so intense and breaking a key support, it could have really started some sort of a dollar sell cycle. And the fact that the bulls saved it and brought it right back into the trade range, to me, means that the dollar is likely creating a basing formation here. Okay, now, that doesn't make me immediately bullish, but it does, I think, mean that these support lines around 101 in this trade range, let's say 101 to 104, are likely to prevail here in the months to come.
I got an announcement about the dollar.
No.
So you know me. I am the biggest bear out there, and I am pretty sure the U.S. dollar is about to shit the bed. And do you know why? Because I'm actually getting kind of bullish.
Oh, there you go.
So I am gonna Gucci it for sure.
Well,
and I'm worried about. I'm especially worried about the euro. I think that the euro. I don't know. Like, why don't you tell me do your voodoo?
Well, for sure.
What it is.
Well, let's start with the one where there's this great bull trend. There was this amazing buy on dip on this euro yen, and. Beautiful ripping to like a 52-week high.
If only I was smart enough to listen to somebody who told me to wait to sell that.
You know what? This thing looks like it's ripping to 160 to 165, bud. Like it's this thing's got a little bit of gas in the tank, and it's interesting because it really comes down to the U.S. dollar yen, which is about to try to press a fresh new high for the year.
So you know what the scary thing about this is? That you're using technicals, and I'm not disagreeing with you, that the tendency is for the market to move that way. Like, that's where the market wants to move. I completely agree with you. Yen's for sale. They're creating yen. They're going to do this. But the trouble is that we now have the risk of intervention.
Yeah.
And when you have a big player in the game that can walk in and just change the price, you actually have to do more than just look at technicals. And
What are the I haven't looked recently. What are the implieds in the currency markets? I mean, are these options reasonably priced so you can just do this with Gamma?
Let me just go. So you're talking about yen? So,
well, yeah.
So what do you want? 3 months, or do you want what? How many months?
Yeah, 3 months. Sure. Let's like if you're
50 delta, or how many delta? You know what? I can never figure out how to get this on my board.
All right. Well, I'm going to keep talking while you're.
I
if
won't
you
be
see
able
if
to
you
get
can
it.
pull
You
up.
know what? It takes me forever to figure it out. I'm not
okay, but it would be interesting because if you're really worried about that, then sometimes you build some bull call spreads or something to just build a way to participate on the prevailing trend, but you have a very specified risk that's on the table, right? And that might just be a better way of doing it if you're really worried about intervention rather than delta wanting this thing. Nonetheless,
you've never found an option you didn't like buying.
Anyway, so let's talk the euro US dollar.
Okay.
And what was interesting was the pop and drop it had yesterday. And so it attempted to bull breakout. So this entire pullback could arguably been defined as a wedging formation, retracing the entire May to July rally. And there was an attempt to break the euro up, which would have obviously sent the Dixie right back down under 100. And because this is such a huge weighted into that index, and that could have sent that euro higher. But this failed rally just continues to show the prevailing weakness in the price action. Now, 109 is my line in the sand. Until we're below 109, then I'm not ready to already say that the euro bulls that have been pressing this since September are done. This could be arguably a pullback no different than we've witnessed back in the start of the year or this one over here in May, right? Like there's these quick pullbacks and they turn. There's just no evidence yet that this is a major top. What would be interesting is if we broke below 109 and then had failed rallies. That would, at the same time, correspond with the Dixie in its, working that 104 to 101 to 104 trade range, and that would really probably solidify the top in the euro, making a short later in the year.
It's not going to happen. It's going to bounce from here because I'm short.
Yeah, well, you know what? What's going to happen is that it's going to drop here first. You might be smart enough to trim some of your position into the weakness, and then you're going to get knocked out on the snapback rally. That's probably what will happen.
I don't think I'll be smart enough to do the first. All right, what else you got?
Anyway, some of these commodities, I don't, just a quick touch on gold. Obviously, you can't really look at the continuous chart because it had that huge contango roll when it went from September to December, which carried this kind of gap higher. But when you just look at the December gold futures, you can see the failed rally coming right back to the lows. And this just doesn't seem like the environment where gold has got the right conditions. And even though there's this amazing BRICS summit with this imminent new currency, but no, the charts just looks like shit. And the way I look at it is that we're in an environment where interest rates are pressing, and generally the dollar is working its way back higher, and we're not in an easing cycle, which is typically, from a monetary policy perspective, when gold tends to do the best. I would not be shocked at this stage if gold is in some sort of purgatory for the entire third quarter, and then we'll have to be waiting till into the fourth quarter to get another bull move.
Okay, what else you got?
No comment. Clearly, you got a position.
Really, I don't actually I do, but not really. I don't have a strong feeling on gold.
So I wanted to just touch on oil and the fact that we broke to 2023 highs. So obviously there's some resistance levels from 2022 above, but crude oil definitely turned. But what's interesting is that we clearly had a scenario where in June, you had pretty much 100% of CTAs short. All the trends and technicals were clearly on a sell cycle. And what we had literally is in 1 month, almost everything flipped full on bullish. And so we had this huge transition that drove flows. At some point here, we're going to see a throwback. Typically, if you look at all the corrections that happened in the last year, they often are $5, $7, and even $9 pullbacks that are often in buy on dips. And that, like if you look at it from a Fibonacci retracement perspective, a 50% retracement is $76, which is about an $8 pullback. Point is, the rally will get checked at some point, but what will be really fascinating to watch is whether it gets bought on dip, and whether or not pullbacks are buying opportunities for, let's say, pressing oil to $90 or so later in this year. I actually generally am bullish on it, but I think you have to wait for a dip to buy. I don't think you keep pressing it out on these rips. Any comment on that, or you want to keep going?
What's the next one?
All right, gasoline. Look at the way that it got immediately bought on dip after the inventory number, and continues to press new highs. So that gasoline futures keep pressing. And then I want to talk nat gas, because nat gas broke out. Now I'm specifically looking at the December contract, because when I was interviewing Chase on Talking Charts and on the Market Huddle Plus, he was specifically talking about this December nat gas contract. And we've been watching this dead zone trade range purgatory going on for 3-4 months, where this contract just has been grinding it. And finally, we got a bull breakout. It's only a few days old. I think the single biggest thing to watch here is whether or not the bulls can actually hold these gains. If it is, it'll be interesting to see whether that nat gas term structure starts to steepen here. Any thoughts on nat gas?
Well, the other thing that's interesting about nat gas, and Mark Fisher mentioned this on one of the podcasts where he was, there is a huge position in the index. He called it the index, but it's really this thing BOIL, BOIL.
Okay.
It's something like 25 to 30% of open interest, and it's a 3 times levered or 2 times levered, whatever it is. Regardless, It's going to add volatility, because as it goes up, they need to buy more. It's kind of fascinating. It's big thing. Usually we don't see that much of the open interest, being exclusively the kind of dominated by the ETFs.
It's interesting. There's this other ETF, which is the UNL, which is actually the strip. It's the 12-month natural gas fund. Is it the strip, or is it just 12 months out?
I don't know.
I'm not sure.
Let's have a look. UNL US amendment. Let me just have a look. See what they got here. Oh no, it's the strip. But it looks like it starts in, they got November's. Oh no, they got SEP October, November, like they got the whole strip. So it's a year.
So they bought the strip. So here you can stop dicking around with all the front month and that sine wave kind of term structure that nat gas has with the seasonality. You can just own an ETF that owns the strip, and then you're just playing the overall level of nat gas.
Just be careful. This doesn't trade very much. But it should. I wish people bought this instead of buying the other one, because
but ultimately structure. It is going to be moving with the net asset value.
No, I completely agree. I'm just saying that
so you can't day trade it.
Don't go buy 40,000 at the market or whatever.
Yeah, it's more for retail at this stage. But I think if you're big enough that you're thinking about 40,000, you're talking about, you might as well just go and build yourself the strip, right? Like
but some people don't like to trade their futures. There's a whole group of folks that are like, nah, I'd rather just do the ETF.
Yeah, well, it just keeps it simple. Pay a management fee and let the managers do it all, right? Anyway, I wanted to just highlight how Dr. Copper is sick.
I hate this thing about Dr. Copper and all this shit. Could you do me a favor? Can you erase some things? Like, can you erase the last 1, 2, 3, 4, 5, 6, 7, 8, 9 days?
Sure. I can just move it like this.
Okay. Like if I showed you one more day, if I showed you this, and like you guys would be like, oh, Dr. Copper's telling us the world's great. And I'd be like, and then 2 weeks later, oh no, Dr. Copper, the world's ending. Like, no,
you clearly don't come onto the macro outlooks from at Big Picture Trading, because that's not what I was saying.
Okay, well, obviously I don't. I miss those, unfortunately.
But yeah,
you run them
just
at 10 o'clock.
But listen, this actually. This was in my mind a prairie dog of a fib zone.
Oh,
so
you knew it.
You basically
Why
had.
didn't you give us the heads up in here, man. That's why we got to pay.
Well,
the big bucks.
we didn't have an episode at
that's
the
why
time.
We got to pay the big bucks. But the Big Picture Trading.
This is the first time we can talk to Prairie Dog since we had an episode.
I guess that's true.
Point is that it was a pop and drop, and the fact that it gave it all back in one day made it highly suspect. But the key is that it's broken trend lines, broken fib retracement zones, and really at this stage, while it could potentially find support at some of these lows it put in over the last couple months, generally it's been distributed. And that's even the iron ore space has also been very heavy. And so while the energies are getting a lot of love and uranium is getting a lot of love, these kind of basic material names are having none of it. There is just no one buying that at all. But nonetheless, I think you just have to roll with what's working. And at this stage, uranium and energies is the only thing that's working.
Well, I'm not disagreeing with that. I'm just saying that this idea about Dr. Copper, it's like Dr. Jekyll and Mr. Hyde. Like
I love it.
I love it. People go, oh, Dr. Copper is saying that the market, the economy's great, and then oh no, Mr. Jekyll's back.
Okay, Kev, has generally copper been distributed all year?
Yeah, no, I'm not disagreeing with that.
Okay, so this is
if
not.
I tuned into the Big Picture Trading and I found out that was,
but no, but like
dog,
even
then I would have been okay. But I'm just saying.
But But I think that's you're micromanaging.
You weren't. Most people were saying like 9 days ago, everything's great because
but that's FinTwit. Right, but I think what we can do is use the Paul Tudor Jones line, and right now if copper stays below that 200-day moving average on a sustained basis, then you have to respect that copper is on the downside of that trend.
Well, I won't disagree with that. Don't mess with Paul Tudor Jones logic. All right, what's the next one? The Sprott Physical Uranium closed the gap on the discount. But it's interesting because the U308 didn't really move that much. You're telling me it's close? It's still at 5.
Well, yeah, but it was way deeper. Like, look at the U308 contract. I'll just think, but like the price has not gone anywhere near its June highs.
I have to listen to someone else that we know talk about this all the time, so I got to be careful here.
Anyway,
but listen, one second, I want to say something. He brought up this point, which I think is completely correct. On risk-off days, this thing is not going offered, which I think is really encouraging. Usually when we see a risk-off day, the spread widens, like the discount to NAV widens, and you see this thing for sale. And that is not happening right now. So I completely agree.
But it's interesting in June. But it was interesting in June. It wasn't a risk-off period in the markets, and it was getting hammered into a deep discount.
But I'm just saying that usually the risk-off periods, like for example, like you look at when it really went risk-off, it went from March 2nd. It was almost at even. It was at a 0.3% discount, and then on March 15th, which is basically in the heat of the regional bank crisis, it went to a minus 14% discount. So that was a risk-off event.
I can't help but to kind of have to call you out on literally. We were just talking Dr. Copper, and you were you were shitting on everyone on the squiggles.
No,
and you're like
they can proclaim the whole global economy. And they go, one moment the global economy is great. because the copper is going up, and then the next moment it's terrible because it's going down. That's all I'm saying. You can play the squiggles. We make money trading squiggles. I'm just saying that it doesn't work as a way to as a judge of the global economy.
Yeah,
that's all I'm saying.
Anyway, what I want to leave it with here is that other than energy, which energy and uranium, I guess uranium is a form of energy. The energy space has been ripping, but every other part of the commodity space is dragging its heels. And like, look at the way wheat is right back down to its lows, corn right down to its lows, the beans right back down to their lows, lumber prices breaking down. Like everything is that if it's not energy, it's just not doing well. And if the U.S. dollar in any way strengthens, like let's say the euro breaks below 109 and we have the Dixie heading to 104, and like maybe this is just not going to be the window where commodities are going to get.
That's not going to happen.
Love.
Because I'm short the euro, so we all know it's going higher.
There you go. So listen, 10-year yields.
Oh gosh, here we go.
No, like unbelievable. Like I personally just this doesn't make sense to me, but to you, this is like
sense. Term premium is still negative, man.
Yeah,
and it's negative carry. Like it makes complete sense, and the fact that the economy is getting the soft landing, which is what I always said, soft landing is the worst. But now soft landing is the worst thing that could happen to the long end.
But Bill Ackman's in your camp now.
I know, that's scary. So I do worry about
my
that.
condolences.
Yeah, and I worry about any time anyone says I'm short in size out loud. Like that's just stupid. Like to go and like tempt the market gods. They don't like that. They're gonna.
I don't know.
I'm surprised they didn't strike him down right then and there.
It's never hurt him in the past
to do
something like that with Herbalife, right? Okay. Anyway, one last thing, and then we're going to move on. I just wanted to highlight that junk bonds have held up, and this is what blows my mind, because the general level of interest rates has been rising, which has made the tide recede, and almost all bonds have been weakening, except for junk bonds. We literally have the credit spreads under 4%, down to 383. Like literally, junk bonds have no worries. Like it's like this is not. There's nothing wrong,
Patrick,
in this space.
Investment grade bonds, 91% of them are trading below the price of par.
Yeah, but look,
forget it. You won't get the joke. It's okay.
Oh yeah, no, like
don't say anything. Martino. We don't want to get into trouble. Yes, Patrick, I'm with you. Credit spreads have been remarkably stable.
Resilient,
just, like unbelievable.
Resilient.
And I actually think that if you were to say, although I have gone bearish on the stock market, I am hesitant to be really bearish because I really think it's going to take credit spreads blowing out first before we get any real weakness in the stock market.
Yeah.
And you're absolutely correct, Patrick. Like pull up HYGH or LQDH, which is just the credit component of those indexes.
Yeah.
They're hanging in there. It looks great. So the reality is that...
Well, it doesn't look great, but it is hanging in there.
No, it looks great because don't forget that pays a dividend. So that gap is actually not even a gap. Like this thing is looking great. They're staying tight. There's absolutely no worries, and it's actually surprising.
And I think that this continues to be the area which I think will be my canary in the coal mine, and this is why I actually think that the market could still go and double top, retest its highs, or create something, because you would think that there would be more warning signs of deterioration in spaces like this.
Patrick, I 100% agree that this should show up ahead of time. Traditionally, it is showing up in credit markets ahead of time.
Yeah, and there's no sign of it. And even then, like, I want to just go out 18 months on the SOFR futures out to December 2024. And they're simply not at all pricing in any rate cuts. Like, I mean, they were pricing in almost like over 2% of rate cuts back in May.
But that's actually, Patrick, that's actually a scary thing, because don't forget, when they're pricing in those rate cuts, that means everyone thinks there's a recession coming. And what's happening now is that we're getting the people giving in and saying, no, there's no recession
This is
coming.
Gonna be a soft landing.
Yeah. So,
and would you buy the gamma on the upside of some SOFR futures out this far?
I hate that trade. I know that's
why?
Because it's just, first of all, it's still there. It's not a normal curve still. Traditionally, you didn't have a curve that looked like this. That's this inverted. All the recession bros, they keep going to this trade. And I know that they're your peeps and that you love them, but like the reality is that the tendency to expect rates to go lower has made these trades not as attractive as they should be. And that's really, I honestly believe that there's better ways to do it.
All right. Anyway, that's all I got, Kev.
All right. Skin in the game, buddy.
Oh my God. You got me. Like, you know what? I caught up to you a month or more back, and you know, I literally closed the gap. I was ready to thing, and then literally the last day you clipped me, and then you've been on a roll. And
what's the score now?
It's 36-49.
I was right. I was talking to Lena. She was trying to, telling me I was only at 48. And I was like, I think I'm at 49. 36-49. Okay, let me tell people. First of all, let's say what the bet that we did.
Yeah, we did the 2-year note, and you just basically did a one touch on the
either side. I gave you both sides, buddy. And listen,
but it was a pretty wide.
Like, you know what? Yeah. Like, our buddy Rupert was laughing that I congratulated you on the trade after you did it, and I was messing with your mind. But it really wasn't a bad price, that one. Like, I've given you ones where you've fallen for it, and then I've given you another one where you didn't fall for it, and then that ended up hurting you anyways, because there's also just delta that can affect it. But this was actually a fair price. I had actually made it cheap. You were supposed to buy this vol. It's just that I thought that we were going to have 2 weeks of nothingness.
Yeah, summer doldrums.
That's what I was betting on. And I was in essence betting, and I remember you saying something like, oh, I have an unemployment and an inflation. And I thought both of those were going to be kind of nothing numbers.
In line.
Which is what happened. And so our bet was the September 2-year T-note future does not trade at 102.10, or I don't think that's right. I think it was 102.10 or 101.04 before August 11th. And Patrick got it and he lost. So now let me tell people about the game, and then we'll do a new bet. Skin in the Game is our weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, every one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to be settled by the next episode, and we're playing to 50, at which point the loser will take out 3.
Which basically means if you win today.
And we can't bet. We have to keep betting 3s, which is bad for me, although it doesn't really matter.
So I was confused about, you've been talking about the what the loser and winner has to do, and then we basically are in text. Wait, you mean I'm the one that's pulling
you have to take the 3 people out. So it'll be 3 Europeans most likely.
We'll see.
We'll see.
But we'll see. We're going to announce the location.
Well, listen, I don't want to goocher it. I could still lose like 4 in a row or whatever.
And you would still have a chance.
Yeah.
Okay, so let's see. Let's see if I can make a run at this.
Okay, so I'm going to do something simple because I was thinking about it. I'm like, I'm not going to go crazy. Let's just stay to your knitting. And I just need 1 win. So I'm just like, okay, 1 win. I'm going to do crude oil futures, a simple up or down. But
okay, so but are we?
But I'm going to pick a different
doing...
month. So I'm going to.
Okay.
I want to think about this. Can you give me 1 second? I just want to pick a month. I am going to choose. I want December. Let's just do the end of the year.
Okay, so we're at 81.51.
So up or down on the December crude oil future.
And we're so now.
Oh yeah. So the thing is, do you want to do a 2-week or a 4-week one? Up to you.
Well, this is a big deal because.
Let's do 4-week.
See, because I think there could be a 5, 6, 7 day pullback, but a month out we could be at fresh highs. Fuck.
Well, okay, so let me just see. What's the
No. Listen, it's a bet. It's an
Okay.
over under. Let's
Well,
just
then
do
you
it.
pick it. You go.
But we're doing it 1 month out.
Yeah, it's going to be not 4 weeks from today, whatever that is.
Yeah. The next episode
Yeah.
in September.
Because you're taking off, and I'm the only one.
All right, I'm going to say higher.
Bastard. Okay,
If we did 2 weeks, I would have taken lower.
do you want to do 2 weeks? Which one do you want? Let's put it this way. I'll let you pick. I'll let you pick.
If you want to take the upside for the next 2 weeks, then we can shorten it to 2 weeks, and I'll take the downside.
No, I'm going to let you pick. I'm not picking. You're going to be a master.
No.
You're going to choose you're going to be like
Gozer
in Ghostbusters. You're going to choose the trade of your finish.
No. Look, right now, say 2 weeks or 4 weeks.
Well,
You're the
I
one
said
making
4,
the bet.
and now I'm offering you
so
1
4.
second.
I'm taking.
I'm offering you the chance. I'll say you can also choose 2, and you can pick either side. So you pick which trade you like best.
Okay, we're doing 2 weeks. I'm taking the downside.
Done. Okay, 2 weeks from now, December futures. I'm up. You're down.
whatever the close on the 25th.
Yep. And
Off of 81.51.
Yep.
And otherwise, I'm taking some listeners out for dinner.
Yeah.
That's,
well, no, but you could win.
It's going to be a good
win.
one.
It's actually, I think you have to win 5 in a row. But you could. There's always a chance.
Yeah. No, but listen, let's
Dumb and
just take it
Dumber.
one. Well, no. Hold on a second. We can make this any bet. Well, at this
I'm
point,
not
it doesn't
betting
think.
more than 3. Why would I?
We're doing 5 points.
I'm not.
Why not?
I'm only allowed. I would like to do less than 3. I would like to do 1. It'd be stupid for me to do 5 points.
Oh, come on. All right, fine. 3 points.
Like, you're not gonna give me
okay, hold on. We need Lena in here. Lena, wasn't it that we were supposed to escalate this to being from 3
It's
points
4
to
points.
4 points?
It's 4 points. It's August now.
Whoa!
It
What's
is-
this bullshit? What do you mean?
Yeah, it was
Yeah.
3 points in July, 4 points in August.
Yeah, and 5 points in September.
Lena,
So it's an
I know you
escalating
work for
thing.
Patrick, but this
No.
sounds like-
This was
sounds sketchy.
we took
This-
a
this-
listener's
no, she announced
advice
this.
to say
She announced this.
oh, we gotta ante up, like, ante the whatever bets. So
So it's 4 points.
yeah,
Kev.
4 points.
Okay.
And 5 points in September for the next bet if I win.
Oh shit. That's bad. Okay. Well, so be it. Watch him win.
So I might be able to
Oh,
nip it
God.
with 3. All right. Okay. Anyway,
So I'm up.
So
So
crude
just so
oil.
we get this right. I'm up on the December future. Patrick is down. 2 weeks.
Yes. 2 weeks.
Oh
The
my
Aug
God.
20th.
What's going on there?
25th.
You guys even got the new X logo.
That's Lena. Lena, where can they? Well, not well. First of all, where can they?
Guys, I
no,
put it
we're
in
not
the
doing
script.
that, Patrick.
we're not
I
doing
put it in the
questions.
script.
All right, that's
Yeah.
I knew you guys would ask, so I put it in the script.
Did you?
all right.
So let's
Kev, read the script.
Put ourselves out of our misery. Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle. We're on Twitter or X or whatever it is called now. Every day, give Lena a shout out. She gets tired of talking to Patrick and I. You can listen to Market Huddle on all the networks. You know the Riz Morale or whatever it's called. And please, if you could, rate it and review us on iTunes. Patrick, where can they find you?
You can find me at bigpicturetrading.com and follow me on Twitter at X.
Yeah.
You can follow me at X at because it's not a
Doesn't roll
little
up
bird
the tongue.
anymore.
It's terrible.
You know what, that meme where they put the X on the bird's ass was awesome.
Oh, I missed
Did
that
you
one.
see that one?
No, I missed it.
Oh, that's hilarious. Okay, but anyway, you can follow me at Patrick Ceresna. Kev, where can they follow
You
you?
can go check me out at themacrotourist.com/chat. And listen, we can never have too many friends. Bear market, bull market, we're just happy to spend some time together on this crazy ride. Now stick around for the after show. Okay, so we got to rate this baby. It's not as much fun when we don't do the listeners' questions because Lena doesn't get to talk.
Yeah, I know.
We should just get her involved in the betting.
Now you're just gonna have to get her talking.
We should get her involved in the betting.
Yeah, for sure.
Well, she did get involved in a bad way.
I like this IPA. Let me just get this out over the way.
Have you figured out what Kush is yet? Kush? I don't know how to say it.
No, I don't. I'm so embarrassed.
Yeah, it's weed.
Oh my God, I knew that. I didn't. I did. I won't lie. Okay. It's It's kosher. Anyway, okay. So
Wonder if it actually
I'm
is
gonna give
kosher.
it. It is.
Like, is it
so
got
I'm
the
gonna
little symbol? Like, just because you say it's kosher doesn't mean it's kosher. You need to have like a little a symbol. I've learned.
Anyway.
Can someone let us and write us in and let us know if this is actually truly kosher? I'd be curious.
Okay, so I am actually going to rate it well. I'm going to give it an 8.1. I liked it for an IPA.
I think it's the name
Yeah.
of the strain that's just called kosher tangy. I don't think it's
Yeah.
actually kosher.
Yeah, I don't think it's kosher. 8.1. It's an IPA. Like, so I get it. For an IPA, it's not disgusting, but that's too high, Patrick. 7.2.
Really?
Yeah, it's an IPA. These things always taste like you're sucking on like a lemon, and then
Yeah, but that's just your view of IPAs
I know.
in
But
general.
what am I gonna do? I just don't like them.
Okay.
You know, I'm not
Okay.
like I'm not a millennial with a beard and a lumberjack jacket. Like I just don't like.
Hey! I don't have a lumberjack jacket.
Hopefully, you
All
don't
right.
have a beard either. Okay, so Lena, what's up? You're the one that we haven't heard from you. So what's going on?
Oh, just packing.
Oh, where are you going?
She's coming to Lisbon.
Nice.
Yeah,
What do you guys got? Something planned? Fun?
I'm ready to get pickled.
We're gonna get. Yeah, got the Rum Shack open for some.
Oh, the
drinks.
Rum Shack's made it to Lisbon now, has it?
Yes.
There's a new drink menu I hear, so I'm gonna be
Yeah.
the taster.
What's the new?
She's gonna be the guinea pig trying out a few of the new
Yeah.
drinks.
Oh, you've been practicing your bartending skills, Patrick?
Absolutely. You know what? I've had to surpass my my love of beer and start mixing cocktails.
Oh, so what's your favorite?
The Negroni.
I knew you'd say that.
But so I have a 30. I have a barrel, so I 30-day age my Negronis.
Yeah.
But I also make a signature one using a cherry liqueur in it, and it's bomb. It's pretty awesome.
Wasn't it you, Patrick, that I was with in Chicago when we went to a tea place?
Yes.
That was just
Yes.
that was nasty. Like they were just the drinks were.
Nasty.
Is this where you had to succumb to Triple P, Kevin?
Oh my God! Triple
No.
P.
This was
Peer
no.
pressure
This
Pat?
was just
Basically, anytime
No,
you're
no.
out drinking with him, he comes out.
yeah. That,
He just
but that's
rears his ugly head and it comes out.
But that in Chicago was actually a Market Huddle piss up, so that was a natural thing.
No. Oh, yeah. I guess that was a little mini piss up afterwards. You're right. That was the
It was.
second night of drinking. The first night when we had to speak the next morning at 8:00, Patrick kept me
that
out
was-
till like 2 a.m. and then brought us home. And then
Yeah,
said,
you're soft. You can't
I'm
handle
soft.
it.
You're right, Patrick. I come home at 2 a.m. and I don't want another drink before I go to bed.
One for the
You're
morning.
absolutely right. I'm soft. You're absolutely correct. I am a softie. the sun's not up. We can keep drinking this, Patrick's theory.
One day my liver will fail, but it hasn't yet. So it's,
Until then.
All right. So, did anyone seen anything interesting yet? Like any advice for our listeners or things that they should check out? Has anybody
Nope.
seen Barbie or Oppenheimer?
I have seen Oppenheimer.
Oh, did you like it?
Yeah. By the way, that was the first time in like years that I've gone to the theater. Like I have just not gone to anything. I thought it was good. Like I'm not gonna shit on it, but it's not like a memorable movie to me. It's not like where I'm gonna be telling everyone it's awesome. But I wasn't disappointed. I thought it delivered.
Okay.
I thought it was a good kind of story of the history behind it, and I don't regret seeing it. 8 out of 10 movies that I usually go into. I usually want to leave the theater in the first 15 minutes.
Well, that one was long. I like long movies, and I even found that one long. So, did you find it long?
Yes, but I had lots of popcorn, so I was right.
Patrick, I'm surprised you don't go to a place where like they serve you.
Yeah, you know what you would think, but I didn't.
I do, but I don't drink that much.
Yeah, the VIPs.
Listen, Oppenheimer, it gets 91 tomatoes. Are you a buyer or seller of that price?
Maybe it's a little too high, but I don't think it's much lower. Like, I think if you're going into the 90s,
Yeah.
it usually means I want to tell other people they have to go see this. And like I said earlier, like, I think I would never discourage someone from seeing it, but I don't feel like, hyping it up. Like,
Okay.
it shouldn't. I think it was good though. I don't want to think. Did you see Barbie?
No, I didn't see Barbie yet. Actually, my wife went without me, so I'm probably not going.
You're off the hook.
How about you, Lena? Did you see either one?
No, I haven't seen either.
No. Okay. So Patrick, Caddyshack 87, buyer or seller at that price?
I'm a buyer.
Oh, of course. Caddyshack's way higher than 87. Okay.
Yes.
Major League 84, buyer or seller?
I'll take a flat on that.
Really?
That's a good score.
You think that's correct? Oh, interesting.
I think that's a correct
Okay,
score.
here we go. I don't know. Yeah, you're not that much younger than me, even though you look like you're 10 years younger than me. Revenge of the Nerds.
Oh my God.
73,
Tell me the number.
buy or sell at that price?
I'm a buyer.
Of course you have to be a buyer at that price. That's completely the wrong price.
That is the wrong price.
Like, you know me, I'm usually a big fan of Rotten Tomatoes, thinking that it can, do this properly, but that's just wrong. Okay, 1 second. I'm just going to look up my favorite 1984 hot dog.
What did they, by the way, give Idiocracy?
Okay, 1 second. Hot dog,
Ooh,
the
yeah.
movie. Is
That'd
this
be
the
a
right
nice,
thing? Okay,
litmus test.
here's one. Hot dog, which is, oh no, this is a German one. Let me find the regular one. You know the movie Hot Dog? Like, I was a big skier, so I loved the movie Hot Dog.
No.
You guys don't know it?
I
don't
saw
know
it so long ago. I know exactly the movie you're talking
It's
about.
looking
but
like
I
it only
can't-
got 58 tomatoes, which is just the wrong price again. Although there are some troubling scenes in there that, with the benefit of maturity and some hindsight, that there was some sections in there that are not appropriate. Okay, what did you say? Idiocracy, which I think is an absolutely fantastic movie, and gets sold. Like, I got to tell you the story about Idiocracy. Okay. 60.
I gotta tell
just
you,
fucking wrong. That's all I can
that's
say.
Wrong.
No,
Just
you know
wrong.
what?
I'm off this Rotten Tomato now that I see
Must
this.
be the idiot's rating.
Yeah.
No, but you know what? Idiocracy. Here's the thing. Idiocracy has a handful of lines that are epic, like ones that are timeless and that just belong and they're so perfect. But the movie has large gaps of where it drags and it wasn't funny in the middle, but yet it makes up for the epic ones when it gets to the really good scenes. It's awesome.
I'm just gonna say
I-
wrong when you said that it drags. It's a fantastic movie. It's awful. It's awesome.
All right, you know
I would
what?
think the other
This is
side
where
of
right now, for those of you that, let's say, are listening to this, I want all of you to go onto the YouTube chat or on the messages underneath, and I want everyone to type in whether or not the score is right or wrong for
60s,
Idiocracy.
okay, that's 60s wrong. Everyone knows that. Anybody with half a brain knows that. So the real question is, what should the score be? So what do you think it should be, Patrick?
No, you know what? I actually think 60 is fine.
Oh God. Oh, that's wrong. That's so wrong. I got to find something else that's 60, and then you can say,
Yeah, I agree with Kevin.
yeah.
Maybe 65. I ain't giving it more than 2/3.
What if you
66.
watched
That's
it
it.
after
That's my
drinking a six-pack? Would that change things?
Yeah.
Well, yes, of course that changes it.
Well, isn't that basically the base to start?
Yeah.
Like six
I got
pack
a
of
funny
beer?
story about Idiocracy. When I joined the group I trade with now, and there's a whole bunch of guys, and I'm like literally a week into it, and they start talking about different movies, and I told them about it, and they had never seen it. And a whole bunch of them, I was like, oh, it's a great movie. You got to go see it and stuff. Like a whole bunch of them, not a whole bunch, a few of them went to watch it. Okay. One guy comes back and he's like, that's awesome. I bought the DVD. And I'm like, oh, that's my guy. The other two guys are like, Kev, I turned it off halfway through. I couldn't take it. Not even halfway through, like 20 minutes in. And I was like, these guys are going to think I'm an idiot.
Yeah.
They couldn't even finish it. So I get it. It's not for everyone. And that's probably why
Wait,
it's got
were
a
they
60.
all millennials or Gen X?
No, they were
or-
old. Well, no, one's a millennial, one was older. And I'm still trying to get it so the other guys see it.
So the one that bought the DVD that liked it was this person
what was he?
millennial?
He'd probably be the last of the Gen.
That's
Okay.
Yeah, I was about to say that's got to be a Gen Xer for sure because like
You think
millennials
it's
don't know.
don't like Idiocracy?
No, I don't think millennials know what a DVD is.
No, I know what a
True.
DVD is. I don't have a DVD player, but I know what a DVD is.
Okay, it's Gen Z that definitely doesn't know what a DVD is. But what do you mean you went and bought a DVD? You can't download it right up.
I'm showing
Can't
my
stream
age.
it on
When
Netflix.
did you get them to watch
It's
this?
probably
10 years ago?
he probably didn't buy a DVD. He probably bought the
Digital version.
the digital version. I'm saying the DVD, looking like an idiot. But anyways, I just love it. I think it's a great movie, and I think that it's so funny and it's hilarious because like so many things almost rang true.
Yeah.
Like you just never thought. Anyways, okay. Lena, you got any? What did you do? Anything exciting this week?
No, actually, I haven't done anything exciting this week. I've been just trying to pack for
Get
the
caught
trip
up on
that
your
I'm
trip?
not. I don't know what to pack, so.
Why?
We're gonna be moving around quite a bit, so
Oh,
I'm not sure.
another
I'm trying
part
to
of the
travel
big-
light, so
the big picture trading adventure in Europe.
Yeah.
You guys should make a TV show out of this.
Don't worry, we got Daniel there. He's going to be drone video
You
footage
should.
and everything.
You should do it just like
Oh, yeah?
like the Euro trip. Like there's the guys that used to do what is the car thing again that I like, Jeremy Clarkson and those guys. Anyways,
Yeah.
whatever that is, Top Gear. They went and did the Grand Tour, and now
Oh,
they have the
yeah.
European Grand Tour. So you could have like the big picture Grand Tour, the big picture European
We're
Grand Tour.
we're gonna get like a motorboat and gonna get to that roulette.
oh yeah.
There's this what do you think call those things that pull behind their oh my god, I can't believe I'm gapping.
Like a, not,
Those
not,
air-filled
not a dinghy.
air-filled things, dinghy
dinghy?
things or
oh,
whatever.
like a tube. You're gonna pull.
The
Tube. What? Yeah, but the thing is there's a huge tube that holds like, well, I think it must like 8 people, and it's shaped like a big roulette ring, and you bet on who's the last one to be able to hold
Oh,
on
that's a
to
good
this
game.
thing.
That is good.
And so the thing is spinning in the water while the boat is pulling it. And people are being whipped off of this thing right and left. And whoever's the last person wins.
Yeah. No, the trouble is that people get hurt. You'd be surprised. Like as a guy that's driven lots of people behind the boat, like pulling them in tubes, and especially like a young, stupid young guy. Like I remember one time I joked with this, like, I don't know, he's like 22.
It's like hitting concrete.
22 or 25. And I said, the one rule is you're not allowed to hang on, to let go.
Yeah, you can't
And
let go.
he thought that was an actual rule. And I took him, and I remember I bounced him, and he got upside down because it was just him, and he was going upside down. And I thought for sure that he was like he had let go, so I accelerated, and he was just bouncing along, skidding along, upside down.
Oh my
'Cause he
god!
hadn't let go.
Did his arms stay on his body? Did
Oh
it-
my god! And the thing was, I think it was like a stag weekend for my brother-in-law or something. It was the groom. And I was like, I almost killed him.
Yeah, Google roulette boat, and you'll see it.
The roulette boat?
Yeah.
Okay. Well,
It's just
anyways,
a
on
Google
that
search.
note, everyone Google roulette boat
Yeah.
and have a great week.
All right. Anyway, yeah, we'll continue this. Obviously, we'll be back and give everyone an update in September.
Take care, everyone. Have a great week.
All right. Thanks, everyone. Cheers.